markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. The major stock averages mixed in the lead-up to data this week. You have only 2 of the 11 major industry groups in the S&P 500 higher right now. Information technology, that is leading the way. And real estate, one of the interest rate-sensitive sectors, that's the biggest drag right now. Volatility in markets shows the focus has changed. At least that's according to Michael Schowell at Ion Macro Management.
Strong economic data typically sent the market down, sent yields up. So it's not necessarily that the economy is at a different point, but I think the balance of investors' concerns have changed. Investors are more concerned about a recession and a weakening economy than they are about the risk of upside inflation.
And right now the S&P 500, 20 points higher. That's up 0.4%, 53.64 on the index. The Dow Jones Industrial Average is down to 18 points. The NASDAQ 100 up 122 points. That's a rise of about 0.7%. And as far as Treasury, the 2-year yield, 1 basis point lower, 4.04%. And the 10-year yield pretty much unchanged. That's at 3.93. Keycore shares, they are jumping right now up over 13%. The regional bank announcing a $2.8 billion investment for the Bank of Nova Scotia. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker. That's your Bloomberg Business Flash. Alex.
All right. Thanks so much, John Tucker. This is Bloomberg Intelligence Radio. I'm Alex Steele. Paul Sweeney should be coming any moment, although I doubt this. He just already skipped out.
It's like a Samuel Beckett play.
It is. It's waiting for Paul Sweeney, which is funny because I really hate Waiting for Godot.
You know, that
it's my least favorite
play, Godot never shows up, so.
I know. It's like you just literally wasted my time, Beckett. I'd much rather hear some of your short plays are much better. Anywho. Bloomberg Intelligence Radio. We are live from the Interactive Broker Studio right here in Midtown Manhattan. Also check us out on YouTube. The Big Take story are always the best stories. They dig into different topics that not only Wall Street but also Main Street can kind of sink their teeth into. And today's big story, Big Take story, is no different. The title is Hedge Funds Smell Blood as Lenders Turn on Each Other. The title was so good, I read the whole piece before I even knew I was doing this segment. Eliza Reynolds-Hannon joins us. She's senior debt reporter, and she's standing by. So, Eliza, before we get into the nuts and bolts of the story, the way I think of it is, okay, you're a company, you need money, you go to lenders, you take out some loans, and there's a capital structure, and that's it. And if I default, then the person on the bottom end of the capital structure doesn't get the money, or gets a reduced payment, and that's normal, right? That's not where we are anymore in this world.
No, it's not. It's like the security that you thought you once enjoyed as a lender, especially a secured lender or a top priority lender, just kind of can disappear right before your eyes these days. And that's because the lender protections on these leveraged loans or high yield bonds has just eroded over a decade of high competition for the higher yielding paper in the market, in a bid to get a chunk of some of those rare, really nice high yielding loans. Investors have agreed to waive all sorts of terms and protections that once put them in the position to be able to say, not so fast, I basically own you now.
Which is really crazy, because then it also opens the door to then a company going to all its different creditors, right? And trying to strike different deals. Can you walk me through that part?
Right. So what happens is the company needs often at least a bare majority of lenders to agree to pulling some of these maneuvers, like stripping assets from the collateral package of one loan and moving them into a new unrestricted subsidiary in order to all of a sudden have new collateral that it can raise debt against. So it goes to lenders and says, hey, if you agree to this, you and a few friends who altogether hold 51% of this loan, sometimes it's a higher percentage, we will let you actually skip ahead of the rest in the new capital structure. We'll let you, for instance, be the funds who can put in the new debt that we're asking for, which will be backed by the old assets that you used to think you already had as collateral. And for that reason, you actually won't have to write off this whole investment. You'll have another chance at collecting even more yield and eventually getting repaid on everything.
So how do hedge funds come in on this then?
Well, the hedge funds have, distressed investors are no stranger to underhanded tactics or kind of just rough strategies. But nevertheless, you have sort of seen them go through stages of grief, it seems, with regard to this new order. So in the beginning, some were in denial. You saw them say, not my company, not my private equity sponsor. They wouldn't do me like that. And as it's happened even more and more, they started saying, okay, we need to go on the defensive. We need to organize to, almost protest that this happened and say, already, 60% of us have gotten together and said, we're not going to work with you. And so you can't actually pull this off. And we talk about in the story, that's the co-op agreement phenomenon. But others are now saying, forget defensive, we need to get offensive. And so they are piling up on cash so that when indeed the company does say, whoever here can give us new money, we're going to put you in the prime position and you can kick all your peers down in the repayment line. We're going to give you the new claim to that collateral as long as you top us off with some new financing. So the way to play this new phenomenon well and win is to always have cash on hand that you can say, hey, put me in the best position and I'll give you a little more financing.
Man, this makes my head hurt. I mean, this is a dumb question, but if I'm a senior debt lender, why do I want to get involved in this at all? If I don't know, if I could go to bed one night and feel very secure in my investment and the next morning wake up and have like 30 cents on the dollar, why would I even do that?
Well, you kind of don't have a choice. There's not anywhere else to go in the market up until now to get those high returns that will, keep you employed as a portfolio manager or keep you getting new money in. It's a little bit of a, immediacy bias that you're only looking to the next quarter or the quarter after that. You need to be churning out these high yields for your investors to stay happy. And you really are just kind of crossing your fingers and hoping it doesn't come to your company. But then when it does, these liability management exercises, so they're called, or the instances of violence, are often designed to actually give the company another chance at a turnaround. So if the obstacles to the company are a bit macroeconomic based, or supply demand, there's some sort of phenomenon that's not totally secular, they say, you know what, we can take on a little bit more of an interest burden, and if we can just get to next year when all of a sudden this or that regulation will change, this company can actually turn it around. We avoid filing for bankruptcy, and then everything will work out fine. So the hedge fund managers who go to sleep and decide to keep investing in this are kind of feeling like they don't have anywhere else to turn to generate the yields that they need to generate.
How many of those companies actually do survive, though?
That's the important question. And so some of that data is really trickling out now, and we do analyze it in the story. Some of them survive, but we have seen increasingly the companies that do one of these exercises in, say, 2021, by 2023, they ended up having to file for bankruptcy anyway. And that's where you see... You might think that means the whole exercise was meaningless, but in a way it becomes all the more meaningful because that's where the removal of collateral or the transfer of collateral really becomes relevant. Because in a bankruptcy, and say the company's getting liquidated, or even if it's not, all those creditors who got pushed down and their collateral was taken away from them, they're recovering 0 cents on the dollar, or 1 or 2 or 3 cents we show in a chart. And those who leapfrogged them by putting in new capital, they come out pretty well. They get 90 cents on the dollar, 95, 70. Just, you see the devastating impact that the original asset shift has on creditors when all is said and done and the company needs to hand out its assets in order to give people recoveries.
Eliza, really appreciate it. I also heard it's your day off and you're doing this anyway. That shows dedication. Thank you very much, Eliza Reynolds-Hannon, a senior debt reporter. Really great story. It's today's big take. You can check it out. You can read more of this story on the Bloomberg and at Bloomberg.com/big take. Again, that headline, hedge funds smell blood as lenders turn on each other. Definitely go ahead and check that out. I hear rumors that Godot might be coming into the building. Could this Could this be true?
He has arrived.
Yes, Paul Sweeney. We've been joking. We've been waiting for Godot all hour,
Exactly.
and now you have finally appeared miraculously.
We're all
Didn't
back.
leave us hanging like Samuel Beckett. All right, much more coming up on the next hour of Bloomberg Intelligence. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at some of the company's stories we're following. This is an important one. Well, it seems like the only difference between extended release Mucinex and its generic store brand counterpart is the price tag. The latter potentially exposes users to deadly cancer-causing chemicals. Millions of Americans who buy the store brand option of various major chains, including CVS, are unknowingly choosing a drug that risks containing a potent cancer-causing agent called benzene. This is according to a Bloomberg analysis of government data. Benzene can cause blood cancers like leukemia and lymphoma. While the inactive ingredients differ, benzene is not listed among them. It instead lurks in an inactive ingredient. This is a white powder called carboner. Well, take that, robocallers. Citibank has agreed to pay $29.5 million to settle a class action alleging it made debt collection robocalls in violation of the Telephone Consumer Protection Act. Under a deal given initial approval by a federal court, members of the class action of consumers who received calls from Citibank to wrong or reassigned cellular telephone numbers, they're going to receive between $350 and $850 each under this settlement deal. And when you were a kid, maybe you spent so much time at the mall, your parents would tell you you should live there. Now you can actually live there. The owner of Saks Fifth Avenue thinking about extending its brand to hotels and luxury apartments. This is according to a report in the Post. They're developing a hotel and 56 private residences in Beverly Hills and townhomes in Westfield, New Jersey. That's in the parking lot of an old Lord & Taylor. Go figure. That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Monday, everybody. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business and economics and finance through our lens of our Bloomberg Intelligence folks. They cover 2,000 companies and 130 industries worldwide. We also bring you up to date with world and national news. And for that, we go to Michael Barr. Michael.
Thank you very much, Alex. Paul, John, former President Trump plans to sit down for an interview tonight on X with the platform's owner, Elon Musk. The billionaire is promising an unscripted conversation with no limits on subject matter. Bloomberg's Bill Ferries.
If you go to Elon's tweet about this whole thing happening, a lot of his kind of the hardcore supporters are asking questions about, they want to see questions asked about a lot of conspiracy theories. So I don't know where this is going to go, but certainly it's going to be an interesting moment.
Musk often butted heads with Trump when he was in the White House, but he endorsed the former president last month. President Biden is giving his fullest explanation yet for why he decided to end his re-election campaign. In an interview on CBS Sunday morning, he described the pressure within his own party to step aside.
The polls we had showed that it was a neck-and-neck race. Would have been down to the wire. But what happened was a number of my Democratic colleagues in the House and Senate thought that I was going to hurt them in the races.
CBS Sunday Morning can be heard on Bloomberg Radio in New York, Boston, and Washington, D.C. Russian President Vladimir Putin says Ukraine's incursion into the Kursk region is an attempt by Kyiv to stop Moscow's offensive in the Donbas region. At a meeting today with top security and defense officials, Putin said the attack that began last Tuesday appeared to reflect Kyiv's attempt to gain a better negotiating position in future talks. Ukraine's military has taken control of 28 towns and villages in Russia's Kursk border region. The acting regional governor says more than 120,000 people have evacuated their homes. The leaders of France, Germany, and Britain have endorsed calls for a ceasefire in Gaza and the return of hostages held by Hamas. In a joint statement today, they endorsed the latest push by the U.S., Qatar, and Egypt to broker an agreement to end the 10-month-old Israel-Hamas war. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. More now with Alex, Paul, and John.
All right. Thanks so much, Michael Barr. Appreciate that. So this is one story that I'm totally obsessed with, Paul.
Yes.
This one's particularly written in the Journal, but you can find it anywhere. That the Olympics may be over, but the fight over the bronze medal in U.S. women's gymnastics floor is just beginning. Did you see this?
I did.
You did?
I did. I didn't make... it was back and forth. First, it was going to this Romanian woman, and then a switch, which I didn't know. I didn't know you could do that. You could challenge these things, but apparently you can. And then it went to American Jordan Childs. Now we're a review of the review. Is now saying it maybe belongs back to the Romanian woman.
And it could go down to like 4 seconds. So basically you have about a minute. You have just a minute after a routine and a score comes out where you can raise a flag and challenge it, right? So apparently, the International Olympic Committee and Gymnastics Global Governing Body says that this happened in 64 seconds, that the Americans challenged the score for Jordan Childs, that she didn't get full credit for a move that she did. Now, the U.S. is saying they have proof that it was done in 47 seconds.
Right.
And this is crazy.
Well, to me, the bottom line is possession is 9/10 of the law, and it seems like Jordan Childs has the bronze medal. She's back in the U.S., Really, what's the IOC
What are they
going to
do? What are they going to do? Like go there and rip it out of our hands? Apparently, 20 years ago, this also happened with Paul Hamm, a U.S. gymnast, and he stared down that demand for his gold before he got a ruling that he could keep it. But he was like, nope.
Yep.
I'm not. Also, because it's not like there was doping or anything illegal that was done. We're talking about 4 seconds. Now, whether it should have been challenged in the first place, there's lots of theories about that as well. But just the whole thing, it just feels so terrible. Like you work your whole life.
Yep.
And then this is what you're left with.
Yeah, exactly right. So, but I was just talking to Tom Keene earlier this morning. I mean, I think the Paris Olympics delivered in every
so
way
good.
possible. You know, we had that strike right at the beginning, but other than that, it was just smooth sailing. Looked great on TV.
I mean, the opening ceremony was super weird, but aside from that, everything was really great. I loved it. I'm so sad it's over.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, David Horiakos, he's our Bloomberg legal reporter. He's got a story out today on B. Riley. B. Riley is an institutional brokerage firm, but they've got some legal issues out there. It's really a fascinating story, so we'll check in with David on that. Nathan Dean, Bloomberg Intelligence senior policy analyst, he's got some work out there saying that vice presidential candidate Walz as a VP dovetails with Harris on finance, energy, and antitrust policy. So we'll get the latest there as they continue to hit the stump out there. Sarah Ponchik, financial advisor at UBS Wealth Management, will give us her markets call. So we got a lot coming up in this hour, and let's kick it off with Mr. John Tucker.
All right, Paul and Alex, we're preparing for a week that's packed with data. Wednesday, we're going to get the latest inflation reading, the release of the Consumer Price Index. S&P 500 last week posting both its biggest one-day slump and best rebound since 2022. And today, Wall Street's fear gauge retreating from its highest levels since the early days of the COVID-19 pandemic. Right now, it is below 20, in fact. S&P 500, 21 points higher right now. That is a 0.4%, 53.66 on the index. The Dow Jones Industrial Average up 13 points at 39,510. And the NASDAQ 100, 112 points higher. That's a rise of 0.6%. Steve Cheveron at Federated Global Investment says the Fed and markets will continue to be data dependent.
I think it's very important that we have a relatively benign CPI data this week. If the CPI is soft, and that reinforces market expectations of, at least 25 basis points, if not 50 basis points of cuts in September, and the Fed is cooperative in terms of Fed speak, I think the market will get some comfort.
Well, JetBlue Airways kicking off a $2.75 billion bond and loan sale. It's going to be backed by the loyalty program. JetBlue is trying to raise reserves and just fund general corporate purposes. Meantime, Moody's has downgraded the airline a notch further into junk territory. JetBlue shares, they are down close to 17% in today's trading. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Alex and Paul.
Thank you so much, John Tucker. So, Paul, the question I've been needing to ask you for the last hour when you weren't here, did you see Deadpool?
No.
Ah.
We had a perfect weekend weather-wise.
It's true, you did.
So, yeah.
Fair enough. It did rain. Maybe that's a different story, but...
Maybe, yeah.
Okay. All right. Well,
So you're still advocating for Deadpool here, big time.
I really want to hear what you think about the Fox and the Disney takeover shade. I know, he's not going to see it. But anyway, a girl can dream. This is Bloomberg Intelligence Radio. We bring you all the top news in business and finance through our lens of our Bloomberg Intelligence folks. We also keep you up to date on the big movers of the day. And for that, we go to Bailey Lipschultz, who is joining us in studio. You're looking at Monday.com. Can you just walk us through what this company actually is?
They help do payroll, stuff like that, in the customer relations, CRM space. It's not customer relations, Jesus, I'm making up acronyms. But they operate in that, in helping kind of people manage payroll and operate with their project management, beating expectations, raising their guidance for the full year. Company is based in Israel. Again, revenue, $236 million, above management's previous guidance and above what Wall Street was looking for. They also called out the number of customers signed up with contracts of more than $100,000 in annual recurring revenue. That's up 49% from the same quarter last year. Customers providing more than $500,000 in ARR, up 43%. So caters more towards kind of a smaller business kind of model. When you look at that, though, up 11%, ticker NDY. biggest jump since May. At one point was trading at the highest intraday level since 2022. So recouping some of the recent weakness for the stock.
Yeah, 52-week high today. So good. That's a big company, 12.2 billion. I've never heard of them before.
That was when you're looking for movers on
I was like,
Monday.
did I take this public back in the day?
See,
with .com?
it was one of those that I had to double check, the threshold of like stock move, margin of stock move, and actual size. And you're like, $12 billion is not a $100 million random company that I would normally try to bring up in these conversations.
That's fair enough, which we appreciate. All right, Starbucks though. So is there an Elliott thing happening, a settlement, or what?
We've got an Elliott thing. We've got a Starboard thing. So
lots of things.
On Friday, Wall Street Journal reporting that Starboard was targeting the company, pushing for changes, did not report the exact size of Starboard's stake, wasn't really clear on what they were wanting to do, but Starbucks, as Bloomberg reporting, working on a settlement with another activist investor. Bloomberg reporting just a few minutes ago that the company is mulling the review of capital allocations in its operations, nearing a pact to give Elliott, a different activist investor, a board seat. So seeing the stock trading higher this morning again, though, when you look at shares of Starbucks, down 19% year to date, really struggling to kind of find its footing.
I mean, is there something structurally wrong with Starbucks, or are people just pulling back a little bit?
I think that it depends. I mean,
China's a problem.
China's a weak part. Alex and I disagree on what discretionary spending as it relates to Starbucks. I
would think Starbucks is kind of discretionary, but close to being a staple. The look I'm getting. Exactly.
I don't understand. As my eye twitches as I look at Paul Sweeney. But yes, I understand your point. Yes, the point. But you also have, workers.
And your order is?
Pay. It is a large venti half-calf Americano with almond milk and 2 stevias.
Boom. There you go.
How many shots of espresso is in that?
I think that I asked for 5, and I get 3 decaf, 2 regular.
Oh, all right. So what's the point of a decaf espresso
Because then I can drink more of it, and it satisfies like my caffeine and my sugar intake.
Wow.
If I drink too much, then I get and so I don't want to do that. So
and that sets you back how much per day?
Oh, it's like I don't drink it every day, but it's like $6.
Okay.
$7. I mean,
I got free coffee upstairs.
Well, I drink the coffee here. You know what?
All right, we're going off the rails.
Yeah.
What else do you got?
Looking at shares of Hawaiian Electric right now, down 16%, had fallen as much as 22%. This is a company that has been kind of mired by those issues related to liabilities from the catastrophic Maui wildfires from last year. Today's update, they issued a going concern warning, which essentially means that if they continue spending cash at their current rate and have the amount of debt that they currently have, they could potentially go bankrupt within a year. Not saying that will or won't happen, but did say Friday that it was required to disclose that going concern risk, which we obviously see kind of some of these knee-jerk reactions. But when you look at a stock that is trading at about $13 earlier in July, was south of 8, and then ripped up to 18 on potential settlement of those kind of lawsuits.
So was it there? I mean, I don't know how the liability is going to come out there.
So those things are really difficult because there are things like who's responsible for trimming the trees that are near power lines, right? When was the last time you serviced that power line? And there are lots of different things that wind up going into it, but the governments have problems because they need the utilities. Like, you can't let a utility go bankrupt. Well, you can, but then they have to restructure. Like, they're never going to go out of business,
right? I mean, they are the energy provider in Hawaii.
And if they do things to then make it more foolproof, like put power lines in the ground, for example, which is really expensive, who pays for that? We do.
Right. Yep.
That's how that goes.
And that's one of the things, just flicking back to 2019, PG&E sought bankruptcy protection after its kind of factor in those California blazes.
Okay.
All right, Bailey, we appreciate it. You and your anti-coffee. Bailey Lipschultz joining us.
I love coffee. I just don't like $7
All right, whatever. All right, well, one stock that's down about 50% is B. Riley. It's facing a wider probe on some risk disclosures. So we want to get a little bit more into this with David Virakos. He is Bloomberg legal reporter. Can you just explain to me, David, what's going on here, what this probe is?
The Security and Exchange Commission has been investigating for several months the accuracy of the financial disclosures from B. Riley, which is a Los Angeles-based investment firm. And we reported this morning that they're also looking into whether they've adequately disclosed the risk in some of the assets. And they're looking at possible improper trading by insiders as well. The company today announced that it's likely to miss its earnings by a good bit, and so I think the poor earnings announcement combined with the SEC news is punishing the shares.
Down 50%, down 84% over the trailing 12 months. That really does suggest that the stock market is really concerned about this thing. Is there a solution here? Is there a restructuring out there? Is there something out there that can save this company and shareholders and bondholders, I guess?
Well, that's the question. I mean, Bryant Riley, the founder and CEO, said today that they're refocusing their business on their core operations, and I guess we'll see how investors react. Their problem is they have a lot of problematic debt that they're going to have to work through now, and they also, it's unknown just the precise nature of their relationship with a guy named Brian Kahn, who B. Riley helped take his company, Franchise Group, public, and then help him take it private. And so there's a lot of interlocking relationships between the two of them. And there's a criminal investigation that's caught up Brian Kahn.
So why would anyone own the stock right now? I mean, what's in it for investors to hold on to the stock? Like, how soon will this legal worries be resolved or not? Like, how drawn out could this be?
The company is contracting pretty rapidly. If you look at its market share, it's down considerably. So this could go quickly. And I guess it's a matter of whether investors still have faith in this company to right itself.
You know, I mean, just looking at, you know, when you think about these investors banks, these brokerage firms, it's in the marketplace, it's all about trust. We saw that with Lehman Brothers, Bear Stearns, much bigger firms. But if you lose that counterparty trust, you're done. Everybody just walks away from you. Is that kind of, it feels like we're kind of at that point right now.
It does feel like we're at an inflection point, you know, whether investors will continue to trust. And I guess we'll have to see how the investigations play out as well.
All right, David, thank you very much for that reporting. It looks like a brutal day for B. Riley and its shareholders, down 50% here. David Voriakos, Bloomberg legal reporter, talking to us about B. Riley. RILY is the ticker. All right, we have to do this. We have to talk Washington, D.C., policies, politics, all that kind of stuff. We've got a new ticket out there for the Democratic Party. Let's see how this thing is kind of stacking up here. Nathan Dean joins us. He's Bloomberg Intelligence Senior Policy Analyst. So, Nathan, you smart folks down in Washington, D.C., you're thinking about policy on finance, energy, antitrust, a lot of issues here. What's some of the early research you and your team have done about this Hayden-Harris ticket here, Walz ticket?
Yeah, so we put out a note last week on Governor Walz. You know, this pick was somewhat unexpected. If you were looking at the prediction markets, for example, you know, Pennsylvania Governor Josh Shapiro was really leading the race until he wasn't the pick. But when it comes to Governor Walz, really the story is that it fits the narrative of where we see the Kamala Harris presidency going if she wins. And that's progressive on some matters like consumer protection, whether you're the Consumer Financial Protection Bureau or over the Federal Trade Commission, and then moderate on others, such as antitrust or big bank capital and so forth like that. So, you know, but it really depends on whether or not Kamala Harris were to defer to Governor Walz and saying, go forth and implement these policies. So we just caution investors on that. But it's really this big pause before we get to the Democratic National Convention next week. And we should see a little bit more from Kamala Harris on her economic policies, which will certainly update our research going forward.
Just in terms of polling, I mean, I keep reading poll after poll that we're looking at a slight lead or a tie in some of the big swing states for Kamala Harris. When do you start paying attention to polls? Because I feel like I don't remember a poll that's been right in a while. So when does that start to matter for you when you're looking at policy implementation?
Yeah, so we don't actually start looking at the polling until a few weeks before the election. So think mid-October, because remember this. The DNC is next week, so the Democrats are going to get a bounce from that. Yeah. Then you have Labor Day. A lot of people aren't going to be paying attention to the polls and the news and so forth like that. And then come September, you have early voting. So certainly the polls that you're seeing right now, keep them in mind. But, you know, we've seen time and time again that polls change over time. Look, September 10th is the next debate. Big swing could happen there. Don't know, but really I think for us it's that mid-October, that 2 to 3 week time frame. But just keep in mind that early voting starts in September, so certainly, you know, you will have some results based off of what happens at the first debate.
And what's frustrating for a lot of people, maybe it's understandable since she's such a late addition to the race, but I guess VP Harris has not even disclosed her economic plan yet, has she?
No, and we're anticipating a big speech later this week, potentially Friday, when she goes to North Carolina, laying out that economic policy, so to speak, because, as you point out, we don't have a ton of stuff to go working off of because, obviously when she was the Attorney General of California, we can look at her work there. She did a lot of work combating the big banks in terms of the home foreclosure crisis, if you will. But when she was a senator, just remember, she was one of 100. And as vice president, she was supporting President Biden's policies.
Exactly.
Now, overall, we think that the Biden presidency has moved more in tune to where Kamala Harris is, as opposed to Kamala Harris moving towards where President Biden was. But our working assumption, as of right now, is that more progressive on consumer issues. So if you're in the tax area, for example, you probably see additional tax relief for low and middle income consumers at that point, but more moderate on the corporate side. So a lot of the regulatory issues that you're seeing coming out of the Federal Reserve, for example, or maybe even over at the FTC in terms of antitrust, if you will, maybe a little bit more moderation there, but we still need a lot more to come from this speech, hopefully.
Here's what I'm thinking.
Go.
I'm thinking that she's able to lay out her economic policy and all her other policies in a short amount of time, and then I'm betting, can we just do a 3-month election window every time?
Right, exactly.
Like we prove that this is something that we actually can do. Anyway, I digress. Nathan, what do you think is going to be a standout that she could really put out in economic policy? Like what could be a winning thing for her?
Well, I think really I think the tax argument is somewhat valid because whether President Trump wins or Vice President Kamala Harris next year, we're going to have a tax debate on our hands. Those Trump-era tax cuts expire for individuals at the end of 2025. Now, we just saw over the weekend that, she came out and said no taxes for tips. That was something that President Trump even touted a few weeks ago. So I think this tax debate is certainly something that consumers would be paying attention to. Look, you don't have to be me to say that nobody wants their taxes to go up at the end of 2025. So I think, she'll come out and say, look, we are going to assure those individuals that if you are making under $400,000 per year, your taxes aren't going to go up. My question for her is she going to try and increase taxes for higher net worth individuals? And is she going to change the corporate tax rate in order to pay for some of this? And if you're in New York and New Jersey, obviously you want to care about what happens with the SALT deduction. And so I would hope that Kamala Harris would address some of that as well.
All right, Nathan, we appreciate it. Thank you very much. Nathan Dean is Bloomberg Intelligence Senior Policy Analyst joining us on all that stuff. Wouldn't that be amazing if there was like a 3-month election window?
Like these snap
like
elections.
That's it.
Yeah,
like what they do in the UK. Like you're not allowed to campaign until a certain date, and then it's all systems go. That would be so cool.
And Kamala Harris hasn't done a press conference or anything yet, right?
A presser.
No,
I guess just rallies. I think just rallies to your point.
She's taking
and
questions
speeches
while arriving and leaving locations, but
that's a little different.
Nothing formal.
She hasn't sat down with anybody, I guess.
No, I actually wonder if that has to happen at some point.
I don't know if that has to happen before she lays out some of these plans. I can't talk about my economic policy if I haven't disclosed it yet. I don't know, but
that's true. Maybe that's why J.D. Vance was also like, she doesn't talk to press. I'm going to go and bring the press to her on Air Force 2 or something.
Right.
His little stunt that happened.
Exactly.
All right, coming up, we're going to talk more about the markets, kind of how do you manage the last couple weeks and what do you do going forward, particularly if you're a longer-term investor. Sarah Ponzik is financial advisor over at UBS Private Wealth Management. We'll discuss her outlook for the markets. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You have 5 of the 11 major industry groups in the S&P 500. They are higher right now. It's being led by information technology, and that's where you find shares of NVIDIA reporting earnings at the end of the month. Right now, those shares up 5.4%. Overall, the major averages mixed right now. S&P 500 up 22 points, a rise of 0.4%. We're at 53.65 in the index. The Dow Jones Industrial average 32 points lower, down right now about 0.1%, and the Nasdaq 100 up 122 points. That is a rise of 0.7%. Getting ready for action-packed week of data. Wednesday, we're going to get the latest inflation reading with the release of the Consumer Price Index. S&P 500 last week, with all that volatility, posting both its biggest one-day slump and best rebound since 2022. And then you have Wall Street's fear gauge, the VIX retreating from its highest levels since the early days of the pandemic. Right now, it's actually below 20. And among the shares on the move today, JetBlue, one of the standouts, for all the wrong reasons, down close to 17%. Long Island City-based JetBlue racking up more debt, $3 billion to be exact. And the shares again down right now about 16%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Alex and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alex Steele and Paul Sweeney live here in our Bloomberg Interactive Brokers studio, also streaming video on YouTube. So head over to youtube.com and search Bloomberg Podcast. That's where you will find us. Boy, if you think back a week ago, right now, the market was panicking, it felt like. I mean, people were selling everything across the board. It was a real confluence of events there that really spooked the market. The market stabilized kind of midday and into the afternoon on Monday, and then kind of clawed back some of that selling later in the week, which brings us to today, kind of a mixed market, red and green on the screen here. But let's see where we go from here. We do that with a professional, Sarah Ponzik, financial advisor, UBS Private Wealth Management. Full disclosure, that's where the Sweeney pile of cash is at UBS.
Yeah.
So they have a whole wing just taking care of me.
Oh, that's nice.
Yes,
That's nice.
exactly.
I mean, everyone likes the Paul Sweeney wing, the PTS wing. For
Tony
sure.
OC, he does it just because he likes me. All right, Sarah, what kind of conversations were you having with your clients last week? Monday must have been a little dicey.
It was, and what a difference just a couple of days makes.
Yeah.
On Monday, if you woke up and you looked at the headlines and you saw what had happened overseas, and then you looked at futures markets, and then the market opened at 9:30 a.m., and it was just a sea of red. It felt like the world was falling apart. And I did. I mean, I had incoming calls all day long from clients asking, what is going on? Do we need to be concerned? Should we be selling our stock portfolio? And the answer was emphatically no, because as we saw by the end of the week, what a difference a couple of days makes.
Yeah.
And if we think back to why did Monday happen last week? There was a confluence of events. Yes, we saw the yen carry trade unwinding. It was, just more concerns about recession post that jobs report. And just also consider the fact that we had seen almost no volatility this year. We were due for some volatility. And then it just took a couple of days, an initial jobless claims report, which showed maybe the labor market isn't as dire as the prior Friday had really suggested, which usually doesn't move markets, but it did. And then by the end of the week, if you had fallen asleep the entire week, you would have never known Monday happened because the S&P 500 was unchanged by the end of the week.
I so wish that I had done that. I could, sleeping is my superpower. I could definitely have done that for like a whole week. So Sarah, I guess the question then, so if someone says, oh my gosh, I'm panicking, do I change what I do? You're like, no, just hang tight. But can you rotate kind of within that and take advantage then of some of the opportunity that came about?
Absolutely. Last week presented opportunity. So especially if you're someone who's been sitting on cash, and it's been great. You can sit in a money market, you're earning, 5.5% in cash, fantastic. But now we're closer than ever to really believing that that's not going to be the case in quite some time. We're going to see interest rates coming down. So what do you want to do with that cash? Obviously, if you're conservative, you could go buy high quality fixed income. But last week really presented an opportunity in the stock market. If you were someone who's been waiting for an entry point, last Monday presented that self. You know, start putting that cash to work, getting invested, putting a plan in place to get invested in the equity market. And when you think about certain pockets of the market, I mean, we just saw tech get absolutely hammered last week. And tech is still a place that we're really still optimistic about. And if you look at US tech valuations, last month they were trading around 32 times 12-month forward earnings. Now they're down to around 27. So more reasonable, and again, an opportunity to get invested in a place that had been so high flying, and many were just scared to chase returns in the beginning of the year.
So aside from technology, which again, a lot of folks are saying, stick with it, where else do you guys see opportunities out there? Because there are, again, a lot of people that are thinking about, if interest rates are coming down, this might be a time for me to think about take on more risk, perhaps.
Yes, absolutely. So we've still been very much pushing at the top of our list, I would say, high quality growth, which, you know, at the top of that list is tech. But when you think about more so tactical trades, maybe looking to small caps, you know, we did see a big rotation to small caps in July when we started thinking about interest rates potentially coming down. When we think about interest rates moving lower, small caps are going to be that prime beneficiary of that. They have a lot of debt on their balance sheets. But at the same time, if you're someone who is concerned about a recession, and I will say for now, a soft landing is still our base case. But in the case of a recession, small caps is really not where you want to be overweight. So finding that balance, but small caps potentially. And then also you can look at some other cyclical industries like industrials. If we do start to see, you know, growth continue to move forwards, interest rates come down, maybe balancing out that high growth exposure with a little bit of cyclicality. But again, if we do see more concerns that a recession might be on the horizon, cyclicals and small caps, that's where it can get a little bit dicey.
It was interesting though, I'm just looking at a 1-month comp chart of the S&P and the Russell, and they didn't really diverge that much. Like small caps didn't tank in relation to the S&P. They sort of moved in tandem. Today they're a little bit off, maybe a little bit more than, but like not that much.
No, it really was, when we think about the rotation we saw in July, it was a 1-week major snap in which we saw small caps outperform. And now, like you mentioned, Alex, we really haven't seen a continuation of that. And we are actually of the belief, look, you should have diversification. You should have a little bit of small caps, mid caps in your portfolio. But when we think about where are we going to see the bulk of the growth and the bulk of returns and outperformance in the years to come, we still believe that's high quality growth, large cap tech, in large part because look, we went from talking about great economic projections to talking about maybe a recession. And frankly, if there are recession concerns, where do people go? They want high quality, they want growth, they want earnings. And nowadays that has become mega cap tech. So we still are optimistic there. Yes, you want diversification, but we're not huge proponents of a major rotation just quite yet.
All right, you're in South Florida. Seems like everybody and their brother's coming down there.
Yeah.
To be fair, she's from there, so.
Oh, you're a local.
That's actually what I say all the time, Alex, is look, I moved down to Florida 2021 when the entire world was moving to Florida. Everyone's still moving there, but I say in defense, look, I was here first. I grew up here. I promise I'm not an outsider. So.
Are they still coming, do you think? I mean, I know you and your office and all the other folks down there are welcoming everybody down. But
It's not 2021, 2022 anymore. It's definitely slowed. Even if you look at the real estate market by us, prices haven't come down, but they are not, continuing to skyrocket at ridiculous paces. So I would say yes. Every now and then, I'm still meeting people on the street who say, "Oh, I just moved here from New York. I just moved here from New Jersey. I just moved here from California," all of the time. But it has slowed from, the breakneck pace at which we were seeing just a couple of years ago.
All those stories that there's not enough schools, not enough private schools, not enough highways for all the traffic.
I know.
Is that a thing?
Yes.
Oh my gosh.
Traffic has gotten a lot worse. And at the same time, anyone who has kids, not yet me, but thinking about if you're moving down here, you got to get your kid on wait lists for school. Public schools are all overcrowded. If you're trying to get, a young child into daycare, they're the first person you have to tell that you might be having a child because, you have to get on the wait list.
Oh my God.
All my neighbors are telling me this. But yeah, no, it's
real.
Definitely
it's
different.
Real.
It's very real. All those stories that you hear, they come from a place of truth.
It's just you wonder. I mean, how long that economy can support all that. I mean,
I wonder the same. No, we have seen a slowing. It's not the same, but we're still welcoming people down there.
Now, what's up with Florida taxes? Like, you don't pay a lot of taxes?
No state income taxes.
So where does
But at some point, doesn't that change? Because you got to, like, build the stuff, like more schools.
Where does the state get its revenue?
Property taxes are higher.
Okay.
So there are higher property taxes, real estate taxes. But yeah, no state income tax, of which I would also say, I have a lot of clients up here. That's why I'm in studio today. I'm here visiting clients. A lot of people trying to change residency for that very reason.
Really?
So it's definitely a factor that comes into play, with the allure of the Florida draw.
That's why, if you're a financial advisor like Sarah, you have to be up on the municipal bond market.
Oh, yeah.
Municipal bond. See, we're going to get Alex into the municipal bond market.
Hey, man, I have to handle all those segments when you're out on Friday. I start sending prep messages to our producer.
Great tax-free income, Alex. Great tax-free income.
I know, it hurts my brain. But before we let you go, though, I had a question about the cash. So money market fund cash, right?
Yes.
That's sitting there. You're like 5%. That's going to go away. Is there like a level where you guys think about where you're like, if it hits 3%, that's when the cash really moves? Like I've been thinking about that with, say, my high yield savings account.
That is a good question. I don't know if there's really a level in which people are going to say, oh my gosh, now I need to start moving cash. I think that mentality, that psychological shift needs to start happening now because look, interest rates are going to come down. We more so think about it, especially if you're someone who's living off of your portfolio. Think of it, okay, how much are you spending every year off your portfolio? Maybe you still want to keep that in cash or cash-like securities like a CD or a treasury bill. So you know that even if there's volatility in the market, you don't have to sell your stocks at a discount. You're not worried about that. You have enough cash on hand. Anything beyond that, unless you have something that cash is earmarked for, you probably want to get that invested.
So in a typical, UBS account that you handle, have your clients been holding more cash because they, in fact, can make a decent return?
I would say yes over the last year.
Right.
We've been trying to encourage them to get invested. And most of the time, look, we like to put an entire plan in place and say, look, especially if you're someone, look, we work with a lot of business owners.
Okay.
You come at a liquidity event and all of a sudden you have a lot of cash on hand, that's scary.
Right.
You had control over your business, you don't have control over the capital markets. How do you think about investing that? So it's not as though you are gonna go ahead and you're gonna get all of that cash invested in a month. You're gonna take time to get that invested, but maybe locking in yields and fixed income now before yields come down, and then on the stock side, figuring out how much risk are you comfortable with, and maybe dollar cost averaging over 6 months, 12 months, even 18 months, depending on your risk tolerance. But that's really where the psychological shift takes place. When you go from running a business where you have so much control over your income to all of a sudden being subject to volatility in the capital markets, it's working through that change.
Interesting. All right, Sarah, thank you so much for joining us. Always great to see you. Sarah's a former reporter here at Bloomberg now. She's doing
the best. I haven't seen you since Kaylee's wedding, have I?
No.
Right? In person?
I just saw Kaylee. She's in town just for the day, so I was so lucky I got to say hi.
All right, Sarah Ponczek. She's a financial advisor at UBS Private Wealth Management down there in Boca Raton, Florida. I guess it's hot in the summer.
But why do you go to California to Florida?
Well, no
They're
taxes.
like the same for me, no?
No.
Weather-wise?
It's
the taxes.
The weather in California is not warm.
I guess that's true.
Unless you're inland, and then it's crazy hot.
Yeah.
But on the coast, it's cool. They have, instead of having fog, you know what they have? Marine layer.
Marine layer?
That's what they call it. It's not fog. It's a marine layer. That's how they do it in San Diego.
Good distinction.
It's Carmel. It's just fog. So we'll see. Coming up, this is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Major stock averages, they've been bouncing between gains and losses. Tech shares leading the way. You have NVIDIA leading a rally in the chip makers. NVIDIA shares right now up close to 4%. Remember, they're going to report their earnings at the end of August. KeyCorp jumping this morning. Shares of KeyCorp up close to 12%. Bank of Nova Scotia agreeing to buy a minority stake in the regional bank in the U.S. The CBOE Volatility Index, VIX, Wall Street's fear gauge, fairly stable right now. It's actually fallen below 20. This after an unprecedented spike last week. Jack Caffrey at J.P. Morgan Chase says after last week's wild swings, markets really should be poised for a lift.
The corporate buyback window reopens with earnings being over, so you can actually start putting something of a bid back into the market. And I think things are okay. More volatile, perhaps, than they were a week and a half ago, but okay overall.
And the Labor Department issuing the first of this week's reports on U.S. inflation. We're going to get July's Producer Price Index. That's out tomorrow. Some of the categories there used to crunch the Fed's favorite gauge of inflation. And then, of course, the consumer prices Wednesday, the CPI and import prices. We're going to get that Thursday. A full slate of inflation reports. S&P 500 right now, 1 point lower. The Dow Jones Industrial Average down 167 points. And the NASDAQ 100 is up 12 points right now. As far as treasuries, the benchmark 10-year is down 1 basis point. That's at 392. The 2-year, 2 basis points lower, 4.02%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, thanks so much, John Tucker. Appreciate that. This is Bloomberg Intelligence Radio. I'm Alex Steele alongside Paul Sweeney. Every week around this time, we take a look at our other research team, and that's Bloomberg NEF, Bloomberg New Energy Finance. Their research is powered by a ton of data sets and models that really focus on commodities, power, transport, industry, buildings, ags, finance, government professionals as they navigate all the change in the middle of the energy transition. And the data is used pretty much worldwide, whether you're a company or you're an analyst. It's really great stuff. So today, we thought we'd focus on battery storage, because you can't make a transition if you can't store the energy. So joining us now for more is Yayo Sakine, Head of Energy Storage Research over at Bloomberg NEF. Yayo, what are we looking at in terms of energy storage? Like, how much storage do we realistically need, and how hard is it to get there?
Right. Thank you for having me today. So to give you some context, when we talk about storage, we're talking about multiple types of technologies. You mentioned batteries specifically. We're really talking about many terawatt hours of battery storage capacity. That's a little bit hard to make it tangible, but just to give you some context on where we see where the market is today, we are at about 1.2 terawatt hours of total batteries deployed. Terawatt hours?
Terawatt.
Yeah,
okay,
exactly.
Thank you.
Yeah,
okay,
so
that's a lot, I'm guessing.
Yeah.
Okay.
When you get to teras, that's pretty big. It's bigger than gigas.
Okay,
yeah,
thank you.
Exactly. So essentially, where we're at is like we've had record years in terms of total deployments of batteries in the world, and this is in the form of both EVs, so batteries that go in electric vehicles. That's in the Teslas, the BYDs that you see being sold, as well as in stationary storage markets. So that's like big grid batteries that are installed to shift solar and wind generation to evening hours, as well as, some people are installing them in their homes because they would like to have some backup power, or they have their own solar system and they would like to shift some of that energy to their evening consumption. So that's quite a lot, and it's definitely like records still continuing to be broken there.
Is the efficiency of batteries, is that getting better, and how does it get better?
Yeah, I mean, good question there. So they have been getting better. So a lot of the trajectory around batteries and the improvement on technologies is very much focused around lithium-ion batteries. We've seen over the last decade improvement in many aspects of the technology, so becoming more energy dense, so you can carry more energy storage capacity.
Meaning like it's not 1 or 2 hours, maybe it could be days?
It could be days, although today the majority of the systems that we're seeing deployed are pretty much 2-4 hours. There is some extension of that, so that means like we can shift more energy to maybe not another like the next day, but maybe then a day in the next week. But primarily today, the majority of the use cases are generally 2-4 hours within a day.
Why is it so hard to increase battery life?
Battery life.
Sorry, I mean storage life. Like, why is it so hard to go from a couple hours to longer?
So it's not technically hard to do. It's more about the cost. So once you start looking at multiple hours and multiple days, that means you have to add more energy storage duration, more capex to that project. And if there isn't really a mechanism for you to be paid for that additional investment that you're adding, the more batteries for duration, you're not really going to want to do that as somebody who's building these batteries. And so it's a lot of it is related to what is the market paying for today and what's the market needs today. In the future, our expectation, and based on BNF analysis, is that we're going to see longer duration needs, and that's primarily because we're going to need to be shifting more solar and more wind generation to other hours and for longer periods if we're decommissioning those gas plants that are currently providing that service.
All right, we're speaking with Yayoi Sakini, Head of Energy Storage Research at Bloomberg NEF. Coming up in just a moment, Expedia CEO Ariane Gorin speaks with Bloomberg Technology anchors Ed Ludlow and Caroline Hyde, and we'll bring that to you in just a matter of moments. What are the next, in terms of batteries and storage, what's the next thing that lay people like Alex and I and John, we should be looking for, thinking about?
So some exciting things, aside from the market level stuff, which is like, as I mentioned, record levels of battery capacity being deployed, probably it's more about like EVs becoming more affordable. So if you want to go into the store and buy, instead of buying a conventional car, you want to buy an electric vehicle, actually having that at a price point that's more accessible for your pocket. That's essentially a factor of multiple things, one of which is the battery costs. So for the battery costs to come down, which is a big portion of an electric vehicle cost, that actually makes those vehicles
Is it coming down?
They are coming down.
Okay.
And that's actually a major story for this year. It's the fact that we've seen batteries at record low prices, especially in China, but that's starting to have a knock-on effect in other markets in the world as well. And so there's a lot of factors around the markets related to that. There's huge overcapacity in the battery manufacturing sector in China today. And then there's at the back of that intense competition of the battery manufacturers in the Chinese market. And that's essentially really putting a lot of pricing pressures downwards in that market.
Before I let you go, do subsidies help from governments to make all this happen?
Yeah, absolutely. So I think in the context of the U.S. specifically, we've seen a lot of gigafactories being announced in the U.S. at the back of the Inflation Reduction Act. They provide multiple types of subsidies. A major one is for the production of batteries, battery cells and battery modules, which are the building blocks of batteries that you see in electric cars, as well as stationary storage. And that's a significant amount, $35 to $45 per kilowatt hour for the production of these batteries. And so we've seen a lot of gigafactories announced, although as of late, there's been some delays to some of those announcements because of the slowdown around EV demand growth.
It's like a chicken and egg thing. All right, Yayoi, appreciate it. Yayoi Sakine joining us from Bloomberg NEF. Really interesting stuff, because how do you need the storage to make other things make sense, but then you need the thing make sense to get the storage.
Storage, right.
It's definitely a
So that
chicken
goes
and
to
an
your
egg.
point. I think it's got to be public-private, as it has been.
Yeah, and you have to make the cost work, too, on the demand side, not just on the production side. And that's, I think, one of the bigger problems that's evolving.
And I still don't have a great hand on what really impacts demand for EVs. I don't think how much of it is price, how much of it is, I really don't care.
And how much of it is like range anxiety, so you need the build out, but you need the demand to have the build out. It's all of those things. So really interesting conversation. We're going to be speaking we're going to listen in just a moment to the Expedia CEO. So Expedia posted better than expected second quarter results last week, even though they warned, Paul, of a quote, softening travel demand in the current quarter. Their gross bookings across their platforms like reservations, hotel stays, car rentals, vacation rentals increased 6%. And $28.8 billion. That's not terrible at all. We are also kind of prepped for this weakness going forward because of bookings holdings wasn't so great. But I think there are a lot of questions as to what the strength of travel will really be over the next 6 months.
The revenge travel, let's assume that's played out. The question is travel a bigger part of your going forward budget than it was pre-pandemic? Don't know.
I don't know. We haven't traveled at all this year. That's not happening at all. Yeah. Yeah, so there is that. All right, we'll go now to Expedia's CEO, Ariana Gorin. She's speaking with Bloomberg Technology anchors Ed Ludlow and Caroline Hyde. I'm Bloomberg TV.
Welcome to our worldwide audiences on Bloomberg TV and Bloomberg Radio. Expedia, it posted better than expected second quarter results. However, the company did warn of a softening in travel demand in the current quarter, and therefore it adjusted its expectations for the rest of the year. Let's dig into the details. Expedia's CEO is with us, Ariana Gorin. And Ariane, you managed to get the nuance because shares absolutely popped on the fact that you'd managed to do what you needed to do and delivered for the quarter that we were posting on, but then you downgraded for a second time. What is the consumer telling you right now?
Well, first, thank you for having me. We were very happy with our second quarter results. We saw an acceleration in our consumer business, which is what we were looking for, and then continued strength in our B2B segment and in advertising. But it's true, as we look at the third quarter, we have seen some softness. It's been a few quarters in a row that air ticket prices have been coming down, that the price of car rental days have been coming down, and we just started seeing a bit of that also in the third quarter, so we're keeping an eye on it.
Ariane, good morning. It's Ed in San Francisco.
Hi, Ed.
Away from the United States, it's been an incredible summer in Europe. The Euros, football or soccer tournament, the Olympics. Why is that sort of event-driven process not more of a confidence giver for you in your outlook?
Yeah, well, first of all, I would say events-driven travel is a true trend, whether it's sports, whether it's concerts. I would say with Taylor Swift's concert tour the last year, you see that really drives travel into destinations. So that certainly plays into our optimism. But again, when we look at our forecasts, we're looking at what's happening on pricing, what's happening in demand. And again, in the long term, people certainly want to travel, which is what makes us sort of optimistic in the long term.
Ariane, what's the technology story for you? If you're going to drive that outlook a little higher than you've already given, is there a way you can more closely match what people are searching for? Maybe the budget-conscious consumer as well, if the consumer is in real time pulling back.
Yeah, well, the great news is that because of the work that we've done on our platform in the last few years, in particular around having a customer identity across all of our brands, we have a better understanding of the traveler across all of our brands, looking at what are they searching for, what are they interested in, which allows us to make more personalized recommendations that are more relevant for each traveler.
Let's talk about the brands and brand loyalty. Before we do that, we just want to remind our audience of TV and radio. We are sat down with the Expedia CEO, Ariana Gorin. And what's really interesting is you have this rollout of sort of a brand loyalty program, One Key, beyond the US and UK, but you're slowing it slightly. And there was an impact perhaps to Hotels.com users and the loyalty programs they had. Can you tell us about what the ultimate goal is there and why you've slowed it a little bit?
Sure. So we actually just came up on the 1-year anniversary of our One Key loyalty program. We launched it last summer in the US, and it's a program that ties together Expedia, Hotels.com, and Vrbo, which are our 3 biggest brands. It allows travelers to earn and burn One Key cash across all of the brands and also benefit from higher discounts, especially in hotels, sort of the more loyal they are. We've been pleased with the results in the US, and we've just launched in the UK. But as we step back and looked at other countries, what we realized is this is a program that works the best when we have all 3 of our big brands operating at scale. And in many countries outside of the US and UK, we have one leading brand. So what we're doing now is we're looking at how do we make sure that we have the strongest loyalty value proposition in each country for the brands that are there. And the good news is, even before making any changes, all of the loyalty members outside of the US and UK are already benefiting from the higher member discounts.
You are relatively new in this seat, May 2024 as CEO. You were on the board a bit before that. But Ariane, you came from the B2B offering, the advertising offering, which you've just articulated is going really well. How, therefore, can you bring your learnings from that to the consumer? How are you focused on driving better margins growth from a consumer that, as you say, at the moment is nervous?
So I would start by saying our consumer business has 3 very strong and well-loved brands in Expedia, Hotels.com, and Vrbo. And they all have great value propositions. My experience, and I think anybody's experience in business, is always that you want to make sure you understand what does your customer need And then how do you have a value proposition that matches it? And so what I'm focused on with the team is making sure that from our technology to our supply to the way we market, each of our brands is very strong in addressing a particular customer need.
Ariane, what's the one single biggest headwind or risk to you and to a consumer's choice to travel for the remainder of this year?
Look, I would go back to what I talked about earlier, which is, prices coming down somewhat. You could say that's sort of a headwind in the sense that, as you report earnings, obviously prices have an impact. But I like to see the glass half full rather than half empty. And when you consider it that way, you think, well, travel's maybe becoming more affordable.
It's great to have some time with you, Ariane Gorin, Expedia CEO here in New York. We thank you.
Thank you for having me.
All right, that was Expedia CEO talking about the quarter, which was interesting, but we were speaking with Expedia CEO Ariane Gorin. Speaking of Bloomberg Technology anchors Ed Ludlow and Caroline Hyde. So you have not traveled this year.
No, I have not. Part of it is because we're doing renovations to a house that we have up in the Berkshires that my husband's had in his family for like 50 years, so it needed a lot of work. And then it was like, oh, hey, by the way, that septic tank, let's redo that. Oh, the mice ate all your insulation. Can you give us another 40 grand? So, that's part of why I haven't done vacation. But,
understood.
But otherwise, no, I think we're a little tapped out right now.
Yeah, it's interesting. I mean, you listen to, the Expedias of the world or the hotel operators or people are, they're combining work with pleasure. That's something that kind of came out of the pandemic, and that seems to still be the case for a lot of people. And you hear that a lot. People kind of just combining that. So the type of travel's changed a little bit here. But my question is, and I'm not sure we know this, on average, has folks' travel budget as a percentage of their total annual budget, has that changed? I don't know. I don't know. It feels like it has, but maybe it'll take a few years to shake out.
But you know what it's changed for me, just in my own mentality, is that I don't want to fly back of the plane anymore.
No, I know,
I want to fly the front. I want to lie down and sleep on my flights, but that increases the budget per trip. So either I make like one trip a year and I kind of save for it so I can do that, or I make a bunch of little trips, but I'm in the back of the plane and I'm uncomfortable.
Right. And my strategy is I only travel when I get paid to travel, with very few exceptions, one of which is Ireland.
Yes, which is coming in the fall, September, right?
September, right. So we'll be going over to seeing the peeps and all the first potato went black in like 1847. My guy says that's it. We took off from Ireland.
No, fair enough. But you got to go visit. You got to go see. You got to represent. Exactly. But also interesting too is that the cruise. So I was interested with Disney with their whole unveiling all the different theme park things. That there also was 4 or 5 cruise ships around the world. And I appreciate that takes time. But apparently the cruising thing I've never been a fan of. I've never tried. But that is sort of maybe the answer to this question.
Yep, and our very own Charlie Pellet, he speaks to cruising all the time. He's a big cruiser. But for Disney, they have a $60 billion CapEx over 10 years for their parks and resorts, and that includes the cruise ships. And so that's where they're putting their money going forward, because that business it's always been a good business for Disney and for Universal, which is owned by Comcast. But relative to the cable network business and the movie business and the TV business, it was always kind of the smaller business. Now, because those other businesses have all suffered tremendous declines and are in a secular decline, it's just elevated the importance of the theme park business for Disney. It's now 70% of their operating income is theme parks. When I covered Disney, it was always 30 to 40%.
Wow.
Meaningful, but not the number one driver. Now it is the number one driver, and they're thankful that they have that business. Same for Comcast, which owns Universal, and Comcast is also upping their CapEx for their theme park business. So they're going crazy.
If they up the CapEx, I mean, because one of the problems with their theme park this time for Disney is that it's just, the attendance was down. Like, it's just too darn expensive. But if you're going to spend $60 bazillion, you're probably not going to lower your fees for me, right?
Yeah, and I tell you, nobody knows pricing and dynamic pricing better than the Walt Disney Company with their theme park business. But again, a lot of folks that I know that are core Disney people, they're saying it's really, really going up across the edge of that envelope, in terms of am I getting value? So
I think you're right there.
So
I don't know.
We'll see.
The Avengers ad was kind of interesting.
Didn't take any of my 4 children to Disney ever.
You didn't?
No. I mean, that is just a feat of just.
How did you do that?
And we just kind of distracted him with other stuff, like
that is amazing. Although I haven't taken my daughter, and she's almost 10, and she doesn't really ask. So maybe we dodged that bullet a little bit. Well, that wraps it up for me and Paul on this Monday. Happy Monday, guys. It's a pretty flat day, let's be honest. Volume really light as well. But Joe Matthew is here in studio. He's psyched. Balance of Power.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
We'll be in Chicago a week from today. So will the protesters. Welcome to the fastest show in politics as we enter week 4 of the Kamala Harris campaign, with new polling showing her leading Donald Trump with only a skeleton of an agenda to show for it. Now, over the next hour, we'll talk about this very busy moment in the race with Democratic strategist Kevin Walling. We'll talk about what we know on the economic agenda, no taxes on tips, for instance, with Mark Goldwine of the Committee for a Responsible Federal Budget. And we'll sit down with Bloomberg opinion columnist Tim O'Brien ahead of Donald Trump's big interview tonight with Elon Musk. Is it an interview? We'll see. We'll have analysis from our signature panel. Rick Davis and Jeannie Shanzano are with us all after we get up to speed on the financial markets. For that, it's my pleasure to turn it to our good friend in person, Mr. Charlie Pellet at World Headquarters in New York.
Thank you very much, and it is a delight to have you back here in New York, New York. We've got stocks trading mixed right now, back to work Monday. S&P 500 index higher by 16, up 0.3%. The Dow, though, begins the week in the red, lower by 30 right now, down just under 0.1%. The Nasdaq Composite Index up 98 for Nasdaq, higher now by just about 0.6%. 10-year at 3.92%, with the 2-year right now 4.03%. Spot gold up 1.1%, higher by $27 the ounce to $24.59. While West Texas Intermediate crude oil up 2.3%, $78.64 for a barrel of WTI. Bottom line here, stocks have wiped out all the losses from last week's market meltdown. Traders are awaiting key inflation data that will help shape the outlook for the Fed's next steps. As for markets and the election, Amanda Agati is Chief Investment Officer for Asset Management at PNC Bank.
While things may be choppy between here and, say, the election or the results of the election, we do think it will pave the way for some additional momentum into 2025. So we're absolutely thinking that we can finish the year fairly strong and set the stage for a strong 2025 as well.
Amanda Agati of PNC Bank. Bank of Nova Scotia is buying a minority stake in Key Corp, which was among the regional banks hit hardest in last year's tumult. Price tag $2.8 billion, all part of a focus on North America. Key Corp surging on that report, up today by 11.5%. Again, recapping a mixed day for the U.S. equity market. S&P up 19, higher by 0.4%. Balance of Power continues now. He's in New York. Back we go once again. Here he is, Joe Matthew.
You can see him right across the table. Charlie Pellet, thank you so much. Welcome to the Monday edition of Balance of Power here on Bloomberg Radio, on the satellite radio, and on YouTube, where we invite you to join us. Search Bloomberg Business News Live. Simple as that. You'll be with us here in the studio. 1 week from today, we will be talking to you at this time from Chicago, and what will be day 1 of the Democratic National Committee, the convention, of course, for Kamala Harris and Tim Walz. And we're going to talk more about that, what role Joe Biden will play on this night a week from now, and what role protesters will play. There's some pretty interesting reporting out there showing that tens of thousands of pro-Palestinian protesters could be in Chicago, even with the change at the top of the ticket. And with that change, we're waking up again today to new questions about Kamala Harris's agenda. We don't have much of one, a skeleton of an agenda, if not what we saw in the Biden administration. And it's interesting as well to see the agenda form on the Trump side. What kind of a world are we in here where J.D. Vance is promoting expanding the child tax credit and Kamala Harris is parroting Donald Trump on ending taxes on tips? So that's where we're going to start here. This is the one thing we can hold our hands on right here, with a couple of exceptions. You know, Kamala Harris already said that she would support an independent Fed and so forth, but this is specific. When I'm president, we will continue our fight for working families of America, including to raise the minimum wage, there's one, and eliminate taxes on tips for service and hospitality workers, there's two. Donald Trump, by the way, says, hey, wait a minute, that was my idea. He rolled it out in June, and at that time we talked to Mark Goldwine, Senior Vice President of the Committee for a Responsible Federal Budget, who had crunched numbers on this, finding that ending taxes on tips would add a couple of $100 million, if not more, to the deficit. He's with us right now to talk about this. I should say billion, by the way. Live on Bloomberg Radio, Mark Goldwine. It's great to have you from the Committee for a Responsible Federal Budget. Did your eyes roll when you heard about this one from Kamala Harris? Now, both presidential candidates are calling for this.
I mean, the tit for tat here is amazing. You know, it just seems like Joe Biden wants a child tax credit, so now J.D. Vance wants a bigger child tax credit. Donald Trump says no taxes on tips, so Kamala Harris says no taxes on tips. Who's going to pay for all of this?
That's what I'm going to ask you now, because if there isn't a plan to offset that, it would result in about $200 billion in deficit spending based on your calculations, right?
That's right. We think the Harris plan, and they've given us some more details, including that it's income tax only, but we think that Harris' plan to exempt tips from taxes and raise the minimum wage would cost between $100 and $200 billion. That's real money, and if there's not a plan to pay for it, it's going straight to the credit card.
Okay. If you put that together with the other one here, the expanded child tax credit, J.D. Vance is suddenly promoting this, and I'm not sure he talked to the boss about this one because Republicans have been pushing back pretty hard on Capitol Hill with every time the Biden administration proposed doing this. What would that also mean for deficit spending?
Right, so the current child tax credit is $2,000. Some Democrats have been talking about raising it to $3,000, even $3,600 in some cases. Vice Presidential candidate Vance has now said $5,000. That $5,000, depending on design, that could be another $2 to $3 trillion over the next decade. That, again, that makes our $200 billion look small, even though $200 billion is already massive.
This is incredible. So without a way to pay for these, we add to the deficit no matter who we elect, and therefore potentially increase inflation while we're at it. Am I right?
Yeah, you know, one of the ironies is the idea of the child tax credit is to help children. But how much are you really helping children if you're burdening them with all this new debt? Who is going to pay this back? It's going to be higher taxes on future generations.
Spending time with Mark Goldwine at the Committee for a Responsible Federal Budget. The knock on the Harris campaign, Mark, has been no real agenda, no real details. What does the committee want to hear?
Well, it's only been a few weeks, so I'm looking forward to the convention and hoping that we'll get some more details there. But what we want to do is have a full plan from Donald Trump and a full plan from Kamala Harris, and then we will score those plans. That's what we've done in every other election. And so far, we're not there in this one.
Well, give us a sense of what she's required to tell us, what it is that we're actually asking about here. You want a tax proposal, I'm sure, more broadly than taxes on tips or a child tax credit. You want her to weigh in on the 2017 Trump tax cuts that are set to expire in the term of whomever becomes president next. What else do you want to know? What should we be listening for?
Yeah, so I want to know her agenda, but what I especially want to know is her solutions. As you mentioned, we have tons of tax cuts expiring at the end of 2025. I want to know what she's going to do about them, and I want to know what Donald Trump is going to do about them. We have 3 major trust funds, highway, Medicare, Social Security, all hurtling towards insolvency. I want to know how she's going to address that. We have a debt limit that's about to come back, and we need to raise it. We have discretionary spending caps that are going to expire. I want to know how she's going to solve all these problems. I also want to know what she's going to do about our massive debt and interest payments. Interest costs this year will be larger than Medicare, larger than defense, our second largest government program. That's just not sustainable. And I want to hear how President Trump and how Vice President Harris are going to turn that around.
Well, we're going to want to hear from you when we learn more, Mark. It's great to see you, and thank you for the reality check as ever. Mark Goldwine, Senior Vice President of the Committee for a Responsible Federal Budget here on Balance of Power on Bloomberg Radio and on YouTube. Just coming off of this interview with Joe Biden, a lot of folks are wondering what it is he might say a week from tonight at the Democratic National Convention. It's clearly going to be a passing of the baton, the torch, whatever cliche you want to reach for. He did talk about it with CBS News. The headline on the terminal, Biden says he dropped out due to risk he'd be a distraction. Interesting. Listen to the president speaking with Bob Costa on CBS.
The polls we had showed that it was a neck-and-neck race. Would have been down to the wire. But what happened was a number of my Democratic colleagues in the House and Senate thought that I was going to hurt them in the races. And I was concerned if I stayed in the race, that would be the topic. You'd be interviewing me about why did Nancy Pelosi say, why did someone, and I thought it'd be a real distraction.
A distraction. The president of the United States, a distraction from his own election. Of course, he was looking down ballot, I presume, when he said that. And it's one of the many things I want to talk about with Kevin Walling. It's been way too long since he's been with us. Democratic strategist, former surrogate, of course, for Joe Biden in the 2020 race. He's back on it now with Kamala Harris. Kevin Walling, welcome back to Bloomberg. It's good to see you. I want to ask you about the convention. I've got a lot of things that I want to talk to you about, Kevin, but of all the people we're going to talk to and hear from today on Bloomberg, I will venture to say that you know Joe Biden more than any of them. And I wonder your thoughts on this as he's trying to go through the motions, trying to emotionally, of course, to deal with this decision that he's now billing himself as a distraction. What did you make of that?
Yeah, Joe, good to be back and good to be with you. I think you're seeing the president in real time still processing some of the emotions with regards to his decision not to seek re-election. He took some time off this weekend gathering with family. You're right to point out just a week from today, it's going to be actually kind of the Joe Biden night at the convention in Chicago. So there'll be a number of tributes to the president. He will obviously have a speaking role on Monday night and kind of kick off the convention. And to your point, pass the baton to his number two, to his running mate. And in that conversation he had on CBS, he talked about being, a transitional president, a transitional leader, something that he talked about early on in his term, then wanted to run for re-election, and then through a discernment process realized that, Donald Trump to him is an existential crisis to this country. And we've seen, just in this past couple of weeks with the rollout with the Harris-Walz ticket that, they're best positioned to take on the former president.
When he says, I thought it would be a real distraction, you can almost hear Nancy Pelosi in that remark, Kevin, and I wonder if that just underscores the idea that it was not so much his own election he was thinking about. It was all the House races, all the members, all the Democratic frontliners who were looking at him, asking for him to step aside.
Yeah, I mean, the president, at the end of the day, is a team player and cares deeply about his legacy. He knows, if the House and the Senate were to become totally in Republican control and the former president to come back, most of his legacy would be washed away with the Republicans in control. So this is a guy, 40 years in the Senate, 8 years as vice president, 4 years as president, who served with any number of these individuals, both in the House and the Senate, and I think really cares deeply about the bench and making sure that Democrats not just win the presidency, but are successful down ticket in a way that's contrasting with the former president, who really seemingly only cares about his own election and not being the best kind of surrogate for down ballot races.
Well, take us to Chicago, Kevin. We're all going to be there together. DNC. A lot of questions about the form this is going to take. I'll ask you about the element of protesters in a minute. There's some troubling reporting on that this morning. But Joe Biden's going to open this convention. That's going to be the sort of passing of the baton, maybe literally on the stage in front of the delegates in Chicago. How high should our expectations be for Kamala Harris to outline a detailed agenda by the time we leave Chicago?
Yeah, I think she's certainly going to, and that's what the convention is all about, not just in terms of, putting our two front folks front and center in terms of, making it issues of character and experience, but also laying out a vision. And you're starting to see the vice president talk about key aspects of her agenda, right? So she talked about lowering the cost of prescription drugs in addition to all the drugs that they've done over the last 3.5 years with the Biden administration, making housing more affordable. You brought up, Joe, in the outset, taking a line from Donald Trump in terms of taxes on tipped workers in Nevada that she previewed before that crowd of 12,000 folks. So look, we got to not forget that she just became the nominee officially just last week, and will continue, I think, to roll out each of these policy prescriptions. She also talked about some of her positions on the border, and immigration in that speech outside Phoenix last week as well, teasing some of the elements of that, signing on to that bipartisan border bill that we had that reformed asylum laws and things like that. So as this process goes forward, she's going to outline a lot more of her policy prescriptions, and certainly that will be on display in Chicago.
Well, I wonder how worried you are about this event being interrupted, Kevin. There is reporting this morning that just because there's a change at the top of the ticket, Joe Biden is not going to be the nominee. Pro-Palestinian protesters will be out in force. In fact, large numbers next week, tens of thousands, is what the Washington Post reports, creating scenes of fury and dissent. It says, in a moment when Democrats will be working to project unity, a coalition of Muslim and Arab American grassroots groups based in the Midwest have sent a letter to Kamala Harris outlining what it would take to win back their votes, including a plank in the party platform calling for a permanent ceasefire. Kevin, they're not going to get that. So what are these protests going to look like?
Well, as we saw, the Vice President handle protest in Michigan last week, kind of when they were trying to shout her down. I think she pretty effectively managed that situation. She was the first, senior administration official to call for a ceasefire. Got some grief from different aspects of my party being so outspoken on that front. So as she said in that event in Michigan, I don't know why you're protesting me. Go after Donald Trump that wants to bring back a Muslim ban, for example, that would never sign on to a ceasefire, who stands lockstep with Bibi in terms of the current situation on the ground in Gaza. So, we'll see these protests. Chicago is obviously set for that. I think, in conversations with the convention team, they continue to extend the perimeter of that with an eye towards security. These people have every right, obviously, to express frustration. But, as the vice president said, focus your frustration on where the actual issues are. And you'll see that she's much more lockstep in terms of calling for the ceasefire and trying to work and bring an end to the Hamas-Israel war than we've seen, from the other side.
Kevin, I have to ask you before you leave us, as a capital D Democrat, what went through your mind when you heard J.D. Vance make the rounds on Sunday morning calling for an expanded child tax credit?
Yeah, listen, I love, I'm a Catholic, so, I believe in converts. So we're happy to have, J.D. Vance, touting our line. I'll note that his voting record doesn't line up for what he's actually calling for. I think he actually missed the vote to extend that child tax credit serving in the Senate. So, words speak, less louder than actions here. But certainly, if you're looking for a pro-family party, that's the Democratic Party. It ain't these attacks on IVF and other things that JD is trafficking in.
Well, it's interesting. JD Vance, he likes Lena Khan. He wants a higher minimum wage and an expanded child tax credit. Maybe he should talk to Kamala Harris about getting those done.
We're happy to have him on board.
It's just, maybe nothing matters. Kevin, it's good to see you. I'll meet you in a week, okay, in Chicago. Thanks for being back with us, as always. Democratic strategist, former Biden surrogate in 20. Now Kamala Harris surrogate as the top of the ticket changes before our eyes. We have a lot more to talk about this hour. Tim O'Brien is going to be with us, of course, writing always for Bloomberg Opinion, wrote the book on Donald Trump ahead of the Elon interview tonight. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we've got the Dow lower, the S&P, NASDAQ, both are advancing. NASDAQ 100 index as well, but the Russell 2000 index of small cap shares slumping now by 0.9%. Stocks, however, have wiped out all the losses from last week's market meltdown. Traders are awaiting key inflation data that will help shape the outlook for the Fed's next steps. S&P up 12 now to 53.56, a gain of 0.2%. The Dow down 77, down 0.2%. NASDAQ up 88, a gain of 0.5%. 10-year yield at 3.91%. The 2-year 4.03%. Gold up 1.3%. 24.63 the ounce, and West Texas Intermediate crude oil up 2.6%. 78.83 for a barrel of WTI. Hawaiian Electric Industries shares have plunged the most in almost a year after issuing a going concern warning. The utility continues to face fallout from that wildfire last year in Maui that killed dozens of people and destroyed the historic town of Lahaina last year. Hawaiian Electric down today by 14.9%. Again, recapping, stocks higher. S&P up 11 right now, up 0.2%. Balance of power continues. He is here in New York. Back we go once again, your host, Joe Matthew.
Pleasure to be with you, Charlie Pellet, here in New York. Indeed, we're live at World Headquarters on Balance of Power, the fastest show in politics, and the Monday edition with breaking news. Tim O'Brien brought this to me in person. Donald Trump is back on Twitter. It's been so long, they don't call it Twitter anymore. He just put his first post on X since when? Let me see here. Since August 24th, 2023, he posted the mugshot. So it's been about a year, and it's not a coincidence, is it? Donald Trump is sitting down for something they're calling an interview with Elon Musk tonight. Happens on X. It's one of these Twitter Spaces deals. Is it X Spaces now? Remember when Ron DeSantis did this and there was all the feedback and the coughing and the weird stuff? That's what we're talking about. It's audio only. And it's Elon Musk who's putting millions of dollars a month into Donald Trump's campaign, talking policy with the former president. This is where we start our conversation with the aforementioned Tim O'Brien, of course, the executive editor, senior executive editor, Bloomberg Opinion, and of course wrote the book on Trump. It's great to see you in person.
Good to be here, Joe.
You're popping corn for this tonight?
I'll be there. I will
hook?
attend. I thought there might have video, but I think they're too concerned about it becoming a DeSantis event where they have technological glitches. So I guess it's audio only. Wow. You know what the other thing I was thinking is about the last time you and I convened, we were in Milwaukee together.
That's true.
And Trump had such momentum coming into that event, right? That Biden had belly flopped at the debate. Trump had survived an assassination attempt. That convention had all sorts of great momentum around it. And you and I talked about that and this kind of deficit that the Democrats had run up, both politically and fiscally, obviously.
Sure.
And whether or not they could overcome that. And it seemed my guess at the time we talked about that was the odds were stacked up against them. And wow, how times have changed.
It's just remarkable the speed with which this has all happened. You also told us in Milwaukee not to buy the idea that Donald Trump had been changed emotionally or somehow changed significantly by the attempted assassination. There was all the talk of unity, and then, of course, we ended the week with Hulk Hogan literally ripping off his shirt on the stage in Milwaukee. The former president, has now invested himself in a debate over crowd size, over racial identity, over some things that have the campaign wondering when policy might become part of this. And that's the Donald Trump I feel like you know. Crowd size matters. Now he's accusing Kamala Harris of using AI to enhance the photos of her rally in Detroit. He wrote on Truth Social, quote, "There was nobody at the plane and she AI'd it." This is fascinating to me because we were already talking about the impact that AI would have potentially on disrupting this campaign. It's disrupting the campaign now, and AI isn't even being really used here. Just mentioning that makes people not trust what they see.
Which is, I think, Trump's stock in trade is that I am the only arbiter of the truth. Don't believe your eyes, don't believe your ears, don't believe your education, don't believe the fact pattern, just believe me, and I will gin up the most ludicrous, nonsensical explanations for how the world works as long as it accrues to my own self-aggrandizement or self-preservation. And you can usually interpret most of what he does through one of those two lenses, either self-aggrandizement or self-preservation. And I think he's feeling right now very much in a self-preservation mode because he has fumbled the enormous political advantages and momentum he had going into the RNC in Milwaukee through no one's fault but his own. I think he gave a very bad speech at the RNC coming off a very well-orchestrated, well-managed convention.
Yeah.
And yeah, I never believe Donald Trump's identity is baked into amber. He is never going to change. I think this idea that he's a unifying figure and he would move past his old self to become a different kind of politician was comical. And even in that speech he gave, it started out with some poignant recollections of the day he was shot, and then quickly devolved into this long, nonlinear, meandering morass of fear, loathing, revenge, no policy prescriptions, and a vision of the United States that's very dark. And I think that was replicated in that campaign ad he posted on Twitter today.
Yes, we haven't even described what he posted.
Yeah, it's a very dark.
He didn't write anything. Just put the video up.
It's a video, and it's very chiaroscuro. It's police sirens in the Capitol, and it has this dark conspiratorial
It's literally
tone.
dark. It looks like kind of a Batman film or something. It's all like at night. And
or a
in the rain.
Hitchcock
It's
film.
pouring rain, Hitchcock. Okay.
Yeah, we could go down that road. And I think it's, we live in the most economically vibrant country in the world. One of the most socially and culturally vibrant countries in the world. There's a lot of hope and opportunity here, and he's not speaking to any of that. He's speaking about revenge and his own neuroses and a kind of a cult of personality. And I think the Republicans are concerned by that. I've talked to them. They aren't happy with this. They feel like he is blowing up every kind of advantage they've gained in recent months.
New York Times got to this over the weekend. I think the headline was the 3 worst weeks of Donald Trump's campaign. Pretty tough stuff here. This is Haberman, Swan, and others talking with people close to Donald Trump. He's got some very ugly words he's using to describe Kamala Harris when the cameras and microphones are not there. And it described a very angry man who upset some major donors, including Bill Ackman at a fundraiser, talking about stop the steal. They want to know what he's going to do on taxes and inflation. And in fact, that post that I mentioned about the AI and the crowd size, he tied that. He says the creation of a fake image is election interference. She's a cheater. We're going to do this again.
We're going to do this again because it's the only game he's got. No one should be surprised by this. He did this prior to the 2016 race. He constantly said Hillary Clinton was going to rig the outcome. He obviously did it against Biden and took action around that with the January 6th insurrection. And it continues today. And he does it when he feels cornered. He does it when he doesn't feel optimistic about his own chances. He had actually stepped back from a bit of this around the convention when he had all that momentum. And then the second things turned against him, he basically started painting this dark, contrary picture of what the United States is about, what democracy is about, who Kamala Harris is, who Tim Walz is. And I think the fact that, they're now going to put J.D. Vance out in front even more on the campaign trail when he's actually been an albatross around the Trump campaign's neck ever since he got named as Trump's running mate, suggests how worried Trump's own handlers are about his ability to convey the kind of message that Republicans can win on. And they really, at this point, they should hang their head in shame because they put someone in play who doesn't deserve to be in play. And look what the Democrats did. Joe Biden belly flopped on an international stage at a debate, and the Democratic Party took action and found a replacement. The Republicans have never done that, and it's not a good service to the American people.
Well, so before all the Trump derangement syndrome tweets show up here as I spend time with you on the air, I need to ask you about the challenges facing Kamala Harris as well. You know what the line is, does no interviews, no news conferences. I'm more interested in the idea of an agenda, something that's actually fully baked, where I can go to a website or hear her elevator pitch to understand, is this Biden 2.0, or is there sunlight between these two? What does Tim Walz think is important? At what point will she have to tell us that?
Well, I think that you've put your finger on it. I think what she has demonstrated is that she has the kind of charisma and appeal, along with Walz, to really deepen the Democratic support for her, but in already blue states, in the New Yorks and the Californias of the world. What she hasn't done is come out with a robust set of policy prescriptions that would provide a roadmap to her supporters about how she intends to govern. And that's really going to matter, as it always does when we talk about these things, in the swing states, because it's going to come back to 6 or 7 swing states that are purple. They are not deep blue, which means Kamala Harris deepening her support in already blue states isn't the same as broadening her support to swing states where the number one issue is the economy.
Yes, right.
And there are voters who are still concerned about affordability. I think that always gets conflated with the inflation discussion, but it's really not about inflation. It's about wages, affordability, the American dream, and whether or not Democrats can deliver on that.
Yes.
And I think that's where she needs to go, and she hasn't fully gone there yet. It can be a shrewd campaign strategy for a tried and established candidate to avoid pressers.
To wait.
And to wait. Right, but she's there. She has to do some of her own self-definition before others do it for her.
This is a really important part of the conversation. I'll ask you in our remaining 30 seconds here. Polls look good for her over the weekend. She's up by 4 points. Wisconsin, Pennsylvania, Michigan in the latest Siena survey, which is significant based on where Joe Biden was. How fragile is this lead?
I have absolutely no idea, but I think the lesson of it is during the Trump era, people have said, well, will law enforcement rescue us from some of these problems? Will the media rescue us from some of these problems? Ultimately, it's voters, as it always should be and always has been, that will provide the outcome the country needs. And I think it's still on a knife's edge.
I'm so glad you could sit down with us, even on a Monday, but it's live in New York. Thank you, Tim.
Thank you, Joe.
Always a pleasure. Find him on the terminal, OPIN Go. You've got that part already. Bloomberg Opinion Senior Executive Editor Tim O'Brien. Great conversation. We'll assemble our panel next. Rick and Jeannie are back together today, too, with a whole lot to talk about. We'll dig into some of these polls. It's not just Siena. We've got the FT in there now, and it turns out, actually, the Won't Pack Down PAC, John Della Volpe, right, Harvard Institute of Politics. He's the polling director there. He's gone to work for the Harris campaign, and he's got new numbers on 18 to 29-year-olds. We'll have all of that ahead. After we check world and national news with Amy Morris in the Bloomberg 99.1 newsroom in Washington. Hi, Amy.
Hi, Joe. The U.S. has shored up naval and air forces in the Middle East to help Israel fend off any major attack from Iran or Lebanon's Hezbollah, ahead of a resumption of Gaza ceasefire talks planned for later this week. Secretary of Defense Lloyd Austin ordered the USS Abraham Lincoln Carrier Group, equipped with F-35C fighters, to speed up its arrival in the region and dispatched the guided missile submarine USS Georgia. The move bolsters Israeli defenses and may deter Iran, which, along with its Hezbollah proxy, has vowed reprisals for the back-to-back assassinations of top militants in Beirut and Tehran about 2 weeks ago. Columbia University amping up campus security ahead of the fall semester. Commuters are weighing in on the potential return of pro-Palestinian protests.
Scary, something you never know what you're going to walk into.
Everybody's got the right to protest in the United States, so there it is.
You have a right to protest. I've been to a few myself. Just you gotta play by the rules. You can't break into buildings, then you're crossing the line, and they got just what they deserved.
Classes are set to resume September 3rd, and officials say the new protocol will stay in effect until further notice. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got stocks trading mixed with the S&P 500 index up 13 now, up 0.3%, 53.57. The Dow down 91, 39,406 on the Dow, a drop right now of 0.2%. The Nasdaq Composite Index up 100 points, up 0.6%. 10-year yield 3.91%. The 2-year 4.03%. Spot gold up 1.3%, 24.63 the ounce, and West Texas Intermediate crude up 2.8%, 79.01 for a barrel of WTI. Bottom line here, equities are extending gains into the third straight day. Sources tell Bloomberg Starbucks is discussing a settlement with Elliott Investment Management that would give the activist investor representation on the board of the coffee shop chain. Shares of Starbucks, they're up now by 2.8%. Recapping the Dow, the S&P, Nasdaq trading mixed. S&P up 12, a gain there of 0.2%. Balance of power continues now. Back we go to Washington. Back we go here in New York. Right across the room, here's Joe Matthew.
With Washington in mind, Charlie Pellet, thank you and great to see you here in New York at World Headquarters. Yes, indeed, the fastest show in politics is on the road here. Kaylee will join us about 20 minutes here in the studio as well as we carry on our conversation on a campaign that is going to bring its focus to X tonight. We just got another post. I say tonight. Apparently this is an all-day affair. Donald Trump posted on what most people still call Twitter for the first time in about a year, a short time ago, to talk about the campaign. He posted a campaign video, whatever. But we just got a new one now. It's an image. It looks like kind of a wrestling promo or something. Donald J. Trump and Elon Musk live on X. Remember the big interview tonight. 8 p.m. Eastern. He writes, enjoy. Just one word, enjoy! Exclamation point. And we probably will. Jeannie Shanzano and Rick Davis are taking the phone off the hook starting at 8 o'clock tonight. We do wonder how well this is going to work, knowing how these have gone before. This is a Twitter Spaces or an X Spaces thing like Elon Musk did with Ron DeSantis. Now, we've got a whole pile of polls to go through, and I want to hear from the panel on that. But since we just got this drop, Jeannie Shanzano, I know, is excited. Bloomberg Politics contributor, political science professor, Iona University. Rick Davis, partner, Stone Court Capital, also Bloomberg Politics contributors. Happy Monday. Great to see both of you here. Jeannie, 8 p.m. Eastern Time. What is going to happen on X? Is Donald Trump going to endorse EVs or something? How does this go tonight?
I think it could be anything. They're going to be hoping, to your point, that they don't have a repeat of what happened to poor Ron DeSantis when he did this. But, I think this is an indication that we've seen actually for the last few weeks that the campaign really feels like if they can target this small group of under 50 men who don't get their news from traditional news organizations. They're described sometimes as low information voters, gamers, and others, that people like he went and talked last week with Aiden Ross, that these will be the people who can put him over the edge in this campaign. And they are very narrowly focused on this group. So we've had them upset about the Rogan endorsement of RFK, which he took back, the Aiden Ross interview, and now tonight, Elon Musk. I think it's just a continuation of where they feel they can pick up this support and start to turn this thing around where they've had a bad few weeks now.
Rick, I don't know your thoughts on this as a campaign tool, but let's be honest, an endorsement by Elon Musk is a pretty big deal. This is one of the most famous people on the planet. Does he bring too much baggage for it to help?
Well, he does divide the room. I mean, there's no question that there's a lot of dissent in amongst the world, domestic politically, around Elon Musk. He puts himself out there. He's sort of veered toward the right all year long. He's been a topic of scorn and also inspiration to hundreds of thousands of people. He's even claimed he's going to deliver just under 1 million votes for Donald Trump. That's powerful stuff, and he's got the financial means to do it. The question is, who does he turn off in the process? I mean, sure, politics is addition and subtraction. So in addition to trying to target these voters that Jeannie was just talking about, what are you losing in the process? Because these are tough acts to follow, literally. Suburban women, goodbye to the Republican Party again for another cycle. They've found somebody else that can speak their language. And then how deep does it go? How far out in the exurbs do you get, losing votes while gaining them in the rural areas?
We've got a couple of important polls out. They dropped over the weekend. They don't all agree, and I'm curious to get both of your impressions on them because we spent the last 2 weeks talking about a honeymoon, and now we can put numbers on some of these. We had the Bloomberg swing state poll, showed them statistically tied in the 7 swing states. Now Siena is out with its swing state poll. Harris at 50% to Trump at 46%. Among likely voters, that's important, not just registered. These are likely voters in Michigan, Pennsylvania, and Wisconsin. Now, we can talk all day long about the headline numbers, but there's something specific here, and Jeannie, I'll start with you, that argues with what we're seeing in the new FT poll. The Financial Times worked with the University of Michigan Ross School. Also, it's in Kamala Harris's favor on the headline. But they found as well that there's disagreement among voters on who to trust when it comes to the economy. The Econ poll on the FT looks good. The Siena poll, however, finds that voters still prefer Donald Trump when it comes to whom they trust to handle the economy as well as immigration. Jeannie, how are you dissecting all of these numbers?
Yeah, it was difficult to make sense of the FT poll in conjunction with what we've seen throughout the campaign and, of course, the latest New York Times Siena poll. And on the issue of the economy overall throughout this campaign, pre-Harris and now post-Harris, the Republicans and Donald Trump have had a strong advantage. So I would not suggest that she has turned that around. This may be an indication that the numbers are moving in her direction, that she is doing better on the economy. She is not as tied to Joe Biden's economic record in the mind of likely voters as as he was specifically responsible for. So numbers may be moving in her direction, but I think it's really premature to say she is winning certainly on this economic numbers. The reality is those issues, economy and immigration, favor the Republicans and Donald Trump. The problem is he doesn't have the discipline to talk about those. And that's where the rub is. I mean, we even heard that in the Wall Street Journal editorial the other day. Can he be disciplined enough to talk about these issues which favor him still? If he continues with these sort of meltdown diatribes on Truth Social X and on these rallies about everything except issues, then he is going to lose this middle of the road that he needs in some of these swing states on these issues. And that's maybe what could be driving down his numbers there, or probably more to the point, driving up her numbers.
Rick, before the weekend, most of the polls showed, and remarkable in its own right, Kamala Harris essentially tying up this race, statistical tie, making up for the gap that Joe Biden was showing in the polls. Do you believe these new numbers showing her actually taking a lead in such a small period of time?
I don't get hung up on the actual number. I see these as directional signals, and she's got some pretty good directional signals, and they're all pointing up. And literally, ever since Donald Trump's speech at the Republican convention, his directional signals, polling-wise, have been pointing down. So this is where the Democrats want to be going into their convention. This is a fully scripted event in about a week. So the assumption is they'll punch through even more positives than they have today. Maybe get a bump in the convention, which means you're rolling into Labor Day with those directional signals pointing up for the Democrats, a critical period of time to start that campaign. You have to count this as a toss of a coin election right now. And I would say on the economy, what was interesting about that Financial Times poll that I read was that 60% of the people polled thought that Kamala Harris needed to take a different direction than Joe Biden's economic policy. And what you're probably seeing is this idea that Kamala Harris is people are writing what they want on her right now. They don't really know much about her in the sense of, specific metrics on issues. So they're willing to give her a chance, right? And And I think her speech at the Democratic convention, which will be the next time tens of millions of people see and hear her, is going to be her opportunity to either make that good for them. In other words, be able to appeal to the broadest section of America she can, or start to take people off of that list of folks who kind of are sitting on her ballot right now wondering who she's all about.
Really interesting, Rick, because Kamala Harris says this week she will roll out a more comprehensive economic agenda. So presumably, Jeannie, we're going to get that before the convention. There'll be a lot of reporting on it over the weekend going into day one on Monday. And that's when we're really going to learn how fragile this lead is, because we're adding actual policy positions to her candidacy. But the other side of this convention, Jeannie, could be a very difficult one when it comes to protests. The Washington Post today reporting tens of thousands are still expected, even without Joe Biden at the top of the ticket. In fact, a coalition of activists, Muslim and Arab American groups based in the Midwest, have sent a letter to the vice president outlining what it would take to win back their votes. They include demands that are clearly not going to be met, like changing the party platform to call for an immediate and permanent ceasefire. What are we in for? You're going to be there. We'll all be there a week from today. How much will these protesters change the DNC?
You know, obviously they're not going to get that on the platform for the DNC. I think this is a test for the DNC and for the Harris campaign, and quite frankly, Harris herself. How does she manage this? I think she really does have to speak her truth to these protesters and say where she stands on this issue. We saw her do a little bit of that after her meeting with Benjamin Netanyahu. I think we're going to see her do more of that, and I think we're going to see her resort to the argument she made the other day at the rally when they interrupted her, which was, if you want to elect Donald Trump, then go ahead, because he is even further against the positions they're at than she is. So she is going to, I think, keep with those messages, but it certainly will be a test. And I think Democrats have to hope this isn't a repeat of 1968. There's no suggestion at this point there will be, but this is where they're at and they have to be ready. And to Rick's point, this is a scripted event, so they should have this under control in the venue. It's going to be outside where we hear a lot more about this.
Yeah, we'll meet you there. Rick, what would you advise the candidate to do in this case? Do you take the hard line? Do you continue to say, no, let me talk? If you want to fix this problem, I'm your only hope, because Donald Trump will make it worse? Or does she invite them into the room, have a sit down, try to welcome them to the party? What would be your approach?
Well, you kind of hope a lot of that is that sort of sitting down is happening now, right? You want to preempt this as much as you can. And then if they show up, they show up. But right now, I would think it's smart on her part to have some leaders from her team, sitting down with these groups. And, they want to argue, they want to make a case. That's great. Just do it peacefully. Do it in assigned locations. Don't, harass delegates. Don't harass the media. Get it as contained as you possibly can. And then don't give it much brook. I mean, honestly, the performance that you want reported is on the inside, not the outside of that convention hall. And if they make it interesting enough, they'll get their share of eyeballs. And the reality is, I think that the student protests at the end of the last semester really wore out the American public, right? There wasn't a whole lot of kind words for these folks who held up people's graduations, tore up school buildings, and made a mockery of a lot of the rules and regulations governing speech at these famous universities. So I don't think there's a lot of goodwill for them going into this thing. They're very vulnerable to having this backfire on their movement, and I would think that they should consider that before basically trying to disrupt a Democratic convention that, as we've all been saying, makes no sense if you look at the politics. Who's more likely to bring a ceasefire to the Middle East, Donald Trump or the Biden administration? Look, we could even see a ceasefire between now and the Democratic convention. So all of this could even change. But again, I mean, you got to be positive if you're the Democrats and run your own convention.
Well, that's a great point. A lot of things could change including this expected retaliatory strike against Israel by Iran. There is reporting on that as well, as Lloyd Austin, the defense secretary, orders the USS Georgia, guided missile submarine to the Middle East, speeding up the Abraham Lincoln, the aircraft carrier, to get to the area, with a strike still expected this week. That could be the backdrop of the convention that we're talking about starting a week from today. By the way, the big Donald Trump-Elon interview tonight, shares of DJT down 5%. This is Bloomberg.
politics to the world of business. This is Balance of Power. Live from Washington, D.C.
Kamala Harris breathes new life into the debate over Fed independence. Welcome to the fastest show in politics, as the vice president finds contrast now with Donald Trump on the role that the president should play in setting interest rates. We're going to talk about this coming up. I'm Joe Matthew alongside Kaylee Lyons in New York. We're at World Headquarters, something different today, as we also have a big pile of polling data to go through. Kaylee, it's good to see you in the big city.
Oh, good to see you too. And speaking of New York, the New York Times in Siena is the one that released the poll over the weekend. Pennsylvania, Michigan, Wisconsin, the blue wall in all three. Harris leading Trump 50-46. We have the margin of error to consider. She's definitely not leading when it comes to the issues of the border or the economy, which makes her Fed comments all the more interesting, especially in a week we're going to get some pretty critical inflation data.
That's true. And more where these came from. The poll in the FT this morning confounding us a little bit, as the Siena poll showed that people still trust Donald Trump more when it comes to the economy. The FT finding exactly the opposite. So we've got a lot of noise in the race now with a campaign that has yet to detail a lot of its policy positions going into this convention next week, Kaylee.
Although apparently there is one policy that both Kamala Harris and Donald Trump agree on, and that's no tax on tipped wages. Right. When Harris said it, it sounded familiar to a lot of us because Donald Trump did say it first. So we'll see how else she fleshes out her economic policy. We're going to have much more on that this hour, of course. But first, as always, we got to get a check on the markets, right, Joe?
Hi, thank you very much. And here's what's going on. Charlie Pellet with a look at what is happening with the Dow, the S&P, NASDAQ, trading mixed right now. We have got the S&P 500 index dipping into the red, giving up earlier gains. Right now, a loss of 7 points, 53.37, down 0.1%. Dow Industrials now lower by 190 points, down 0.5%. NASDAQ up 15, a gain there of 0.1%. The Russell 2000 hard hit today, down now by 1.1%. 10-year at 3.90%, with a 2-year 4.02%. Gold is up 1.3%, 24.63 the ounce, and West Texas Intermediate crude up 2.9%, 79.05 for a barrel of WTI. Bottom line here, stocks now trading lower, S&P down 0.1%. B. Riley Financial shares very hard hit today, down now by 1%. B. Riley has suspended its dividend and its warning of new losses as the firm writes down a portion of its stake in Franchise Group, a troubled U.S. retail business. It comes as Los Angeles-based B. Riley faces a widening investigation into whether it gave investors an accurate picture of its financial health amid a string of losses and a sagging stock price. Again, B. Riley down by 51%. Recapping, stocks lower, S&P down 4 now, drop there of 0.1%. Balance of power continues here in New York. Let's toss it back now to Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you. Great to be here with you in person. Usually I talk about how Charlie's in New York and we're here in Washington, but today we all get to be together. And no matter where we are, Joe, we've obviously been tracking carefully all of the headlines coming out of the Middle East, as Israel is still awaiting retaliation from Iran for the killing of 2 leaders of Iranian proxies. And then, of course, there's also the questions around ceasefire talks, which allies would like to see happen later on this week. We just got a statement out from the National Security Council here in the U.S. that says President Biden today spoke with France, Germany, Italy, and the U.K. to discuss the situation in the Middle East and ongoing efforts to de-escalate tensions and reach a ceasefire and hostage deal in Gaza.
Important update here, Kaylee. This is ahead of talks starting on Thursday. Is the idea that everyone, at least so far, we think might be at the table. Hamas has been suggesting it will not have a representative there. But how you have this at the same time as this impending retaliation from Iran is remarkable. That has not gone away. Reports today suggest that this is still in the works and could in fact happen within days, Kaylee. Defense Secretary Lloyd Austin now ordering more assets into the region. The USS Georgia, that's a guided missile submarine. We've also got the Lincoln Aircraft Carrier Strike Group said to be speeding up its voyage to the area. The end of this week is going to be remarkable, and that's going to be the backdrop for our convention in Chicago next week. When I say we, we're all going, and it's going to be quite a conversation that we have at that point. So before we get to the stalwart, you know Joe Weisenthal's coming in here? This is one of the benefits of being in New York. He sends one tweet, and then we'll have this is going to be the most listeners we've ever had. Nick Wadhams is with us in Washington right now, of course, leading our national security team with the headlines on Israel and Iran. Nick, it's great to have you. Are we going to see possibly both of these happen this week, a ceasefire and a retaliation?
Well, that is definitely the question everybody wants an answer to. I mean, I think these two things are actually linked in the sense that the Biden administration and allies are hoping to get more momentum around the idea of a ceasefire, in part to try to head off that Iranian attack. So the idea being that if they can show Iran and others, look, there is a credible possibility that we could get this thing buttoned up by the 15th, when there's supposed to be a new round of talks for the ceasefire, that may in some ways deter or shape the Iranian response. If you can basically make the argument, hey, listen, an Iranian response and an attack on Israel will scuttle the chances for the ceasefire. So obviously Iran feels that it's compelled to attack Israel, though Israel has not taken credit for the killing of a senior Hamas leader in Tehran. But these two things are very much connected. We're all waiting to see what happens next.
Well, and the question I have listening to you, Nick, is the other party that needs to agree to the ceasefire is Hamas, which is an Iranian proxy. So if Iran doesn't want the ceasefire to be agreed to so that they can retaliate against Israel, why would Hamas say, okay, we're on board, here's your hostages?
Well, I mean, it's a great question, because we're always trying to figure out who exactly has the influence and to what degree Iran is actually shaping this thing. I think it's just also the death of Ismail Haniyeh a couple of weeks ago really upended the whole power structure. I mean, one thing we really have not been able to get to the bottom of anyhow is how much either side really wants to have this ceasefire, because their goals, as we've talked about so many times before, seem to be so opposite. Hamas wants Israel out of Gaza for good. Israel wants Hamas no longer to exist. So it's very unclear where you find an actual resolution when the two sides' demands are so opposite. But I think what you're seeing here really is a sense that what the U.S. and allies want is, listen, let's just pause the fighting, get this thing to stop for a little bit, try to ease some of the pressure out of the situation, avoid the escalation into a bigger war, and then we can figure out what happens next. So many big challenges over the long term, but in the short term, what you really are seeing is just, let's just get the guns to be silent for the time being, and then kick the can down the road a little bit.
Nick, we have to ask you about Ukraine while you're with us just in our last moment here. Massive evacuations in the Kursk region of Russia as, of course, Ukraine continues this incursion across the border. Vladimir Putin is sending reinforcements. What is this going to turn into? Are they, in fact, moving the border in the process?
Well, I mean, a lot of questions about the Ukrainian motivation here, but obviously, if they are able to hold, to occupy, and then crucially to hold that Russian land, that's not something that they're going to be able to do for a very, very long time, presumably given the number of forces they actually have. But whether that would be some sort of a bargaining chip when you do start thinking down the line about the possibility of negotiations, a little bit of like, hey, you took some of our land, now look at us, we've got some of yours. It gives Ukraine a little bit of leverage, a little bit of something to trade. Obviously, a big shock for Vladimir Putin, makes him look very, very bad. Looks like he's not totally in control. Certainly something that gives a little bit of an advantage to the Ukrainians.
All right, Nick Wadhams, who leads our national security coverage in Washington, thank you so much. As always, obviously, President Biden keeping himself apprised with this phone call today of what's happening in the Middle East, surely what's happening with Ukraine and Russia as well. But, Joe, he's also gearing up for later this week to actually appear beside his vice president, now Democratic nominee, on Thursday in Maryland to talk specifically about the economy and bringing costs down for people. This is something we're hearing Harris talk more and more about.
I guess a preview of Monday. He's going to be speaking the first night of the convention, Kaylee. This will be the first time we see them together, though, on a stage. Even as they've been both talking around this incredible change that we've seen. He sat down with CBS News over the weekend. Joe Biden suggesting he left because he was becoming a distraction, presumably down ballot. And she's been asked about Fed independence, whether she would continue the line of independence that we heard and saw, of course, from Joe Biden every time we talk to Jared Bernstein. We joke about it. Or be like Donald Trump, who would like to be basically setting interest rates himself.
Yeah, well, he said that at Mar-a-Lago. He thinks the president should have a role in setting monetary policy. He had just said that at the end of last week. Obviously, the vice president thinks differently about this. And someone who's thinking always differently or not is Joe Weisenthal, who is here with us in New York. He's co-host of Bloomberg's Odd Lots podcast, also the stalwart on X.
Came all the way here from the other side of the room.
We can't get you on the show unless we come to New York.
I'll come down sometime.
No, just here, even
standing
from here
invitation.
All right, I will call anytime you want me to call in. But I'm thrilled to be here.
It's so cool.
IRL with you guys.
Well,
what are we talking about? Fed
Fed
independence?
independence. We were talking about this in
Yeah.
our morning editorial meeting. Does the voter care about Fed independence? Or is it just us sitting in this room
I
here at
don't
Bloomberg
think
and listening to odd
there are
lots?
many Fed independent voters, even on Wall Street. I mean, I'll say a couple of things about this. One is that, there is a widespread consensus internationally among economists that economies benefit when there is an entity that is not directly politically sensitive, that the Fed chair doesn't have to stand for re-election, etc. There is a view that, counter-cyclical monetary policy is good, particularly when inflation gets too high. I mean, you see this. Look, right? So right now we're at a period where inflation has come down a lot. But, the talking point that both of you mentioned is the idea of cutting taxes on tipped workers right now. Now, economists would say when the economy is doing really well, that is not a good time to cut taxes. That's an accelerant. It's the exact opposite. But no one wants to talk about that, or no one wants to do that. That's difficult politically to do. There was the comment that I believe Trump also made about ending taxes on Social Security, which is essentially another, it's a tax cut. It's more spending, et cetera. Again, probably not the type of thing you'd necessarily want to do when the inflation is as high as it's been. All that being said, Trump had some decent instincts about monetary policy. Many people would say he was right, particularly in 2018, 2019, during some of the tightening cycle. And in fact, Powell himself had to walk back some of the cuts prior to COVID. So, there is a sense in which Donald Trump seems to have some pretty good instincts about where the economy is, what's necessary at the time. But fundamentally changing, who has a say in interest rate setting, I think many people consider it to be a fairly radical idea.
He's sitting down with Elon Musk.
Yeah.
Tonight. Did you see it's like a wrestling ad that they put up?
Yeah, so he's been gone. Last year he tweeted his photo of the mugshot.
Yes.
But he's been disappeared from Twitter for so long.
About
It's
a year.
kind of amazing. He's
DJT stock is down 5% now.
Yeah.
That's an earth shaker.
It is.
Joe Weisenthal.
Because that's like the one thing that Truth Social had going for it was that they had the
That's the one
monopoly
guy.
on Trump posts.
So what are we in for here? Are you compelled by this sort of pairing of personalities? Is there policy here? Does the Elon Musk endorsement mean a lot to somebody? Who cares about it?
We'll see. I mean, look, both Trump and Musk have their sort of cults of personality, so to speak, and they obviously dovetail ideologically on a lot of things. It's an interesting choice. Is it a vote getter or a dial mover? You know what I will say though, there is something about Twitter specifically that I believe is very influential in the media, and it's the sense that like reporters, and I'm guilty of this myself, like we see stories, things that people talk about on Twitter more than any other platform become things that we write articles about or do podcasts about, etc. And there's no escaping that fact. So I don't think like Twitter itself is a medium that like changes votes. But Twitter itself, I do honestly believe, changes what the media will cover. And so therefore, I think if you want to influence reporters, which I think is important for both candidates, if you want to influence reporters, it makes a lot of sense to be active on Twitter.
So we're still calling it Twitter, to be clear.
Oh, sorry, yes. What happened? I'm just old school. What happens on X?
This is the one day I was trying to call it X too, and now everyone's all right.
You
fine,
know
I'm
what's
going
funny
back.
is I think during Trump's trial in Manhattan last year, Trump's legal team objected to a juror who still called it Twitter, which I thought was really interesting, and they were probably right to, because I feel like the sort of like Elon Musk fans, like they were really quick to like switch from Twitter to X, whereas the old school people were like, no, we're going to keep calling it Twitter. So when that potential juror said, no, I still call it Twitter, the Trump lawyers were like, no, he's out.
Well, I also am curious. I think we all remember what happened when Ron DeSantis launched his presidential campaign over Spaces, and it was super glitchy and just technically
is still ringing in my ears.
Didn't go very well. And I noted Elon Musk tweeted last night. X posted.
X. Yeah, no, that's the problem.
I know. The verb still feels like tweet. But he said he's doing scaling tests ahead of this thing because they could potentially break the system again.
No, true. And that was a disaster because then they had other folks, like the VC David Sachs was on that call and he was getting interrupted. Like, probably the worst way to introduce your campaign imaginable.
That's saying a lot on the platform.
Yeah, that's right. That's right.
Spent a lot of money on. Who cares about this election right now in the financial world? Because we keep hearing analysts tell us that nobody pays attention until we come back from the beach and the kids go to school. But I feel like, Joe, people are paying closer attention than ever earlier.
Well, what I would say is it felt like nobody was paying attention at all to the election until the debate. And I feel like the debate marked basically day one of this election. You know, it's a really good question because if you take Trump's at his word seriously about what he wants to do, there's some pretty big implications for the economy. I'm thinking particularly on tariff policy, specifically, which he takes seriously. It's one of the things that in the 2016 race, he talked about tariffs, and he kept his promise. You know, politicians don't always keep their promises. He did introduce new tariffs. He believes
Joe Biden kept his promise, too.
But if you look at, like, the market, does it look like we're about to enter some major escalation of a trade war? I don't really see it.
Nope.
So, you know, one of the questions seems to be is like, well, why isn't the market more anxious about, you know, I'm not even saying bad or good, I'm just saying potential changes. There's still kind of hard, it's hard to see the fingerprints on the election so far. You know, at this point in 2016, everyone's like, in the 2016 cycle, it's like we were all watching the Mexican peso, right? And like when Trump's polls would go up and the peso would go down, et cetera. It's not obvious to me looking at this market that there's like some clear Trump trade that has emerged.
Well, that's just because everybody's trying to figure out if the Fed's going to cut by 25
That's
or
right.
50 next month, right?
That's
Which is
right.
why the
That's what
inflation
everyone's-
data is so important this
Yeah, and everyone's looking at the short term and the what is happening with the state of the labor market, but there's not some clear basket of stocks or something that seems to be directly like toggling related to what happens in this election, at least as far as I've seen.
Well, that's honest. What do we get after this thing tonight? He endorses EVs.
Yeah.
And does Elon
Trump is
Musk
so funny.
work with the UAW or something? Does he? He's going to complain about the unions. That's why he hasn't been invited to the White House.
It's so right. It's really funny. I don't know. There was a comment because Trump made a comment in his speech recently saying, "Oh, he likes EVs. He owns an EV, and in part because Elon Musk endorsed me." It's so refreshing to hear a politician talk like that in some way because we're not really supposed to like
be honest. You mean?
Yeah, you're not really supposed to say like, well, this person endorsed me, so now I'm going to say good things about their product or their industry, etc. We know that Trump has been really critical of electrification. He's talked about all the problems it's going to cause, and he's talked about, well, if we have electric trucks, then they're not going to be able to, the weight that bridges can stand is not going to be enough for them. Some interesting points. It'll be interesting to hear if EVs specifically come out.
Amazing. He landed the plane just like that. I thought with podcasts, you just
He's
talk.
got some practice.
There's no out time ever, like we have
Nailed
on
it.
Bloomberg.
Street. I'm Charlie Pellet. We do check the markets all day long here at Bloomberg. We have got stocks struggling to find direction. The Dow does remain lower. S&P turning around since our last update. The S&P now higher by 10, up 0.2%. The Dow lower by 82 points, down 0.2%. Nasdaq Composite Index up 79, a gain of 0.5%. The Russell 2000 down 0.8%. The 10-year yield 3.91%. The 2-year 4.02%. Gold up 1.3%, 24.62 the ounce. And West Texas Intermediate crude oil up 3%, 79.13 a barrel on WTI. Bitcoin surging 2.4%. Bitcoin does remain below $60,000, but Bitcoin right now closing in on that threshold, 59,888 on Bitcoin. Chevron has begun production at its 6th operated production facility in the Gulf of Mexico, a key milestone in its target for 3% annual oil and gas output growth. Chevron says the Anchor project has the capacity to produce 75,000 barrels of oil and 28 million gross cubic feet of natural gas a day. Recapping, stocks higher, trading mixed, S&P up 8, little changed, up by about 0.1%. Balance of power continues now. They are here in New York. Once again, Joe Matthew and Kaylee Lines.
All right, Charlie Pellet, nice to be here with you. Thank you so much. I am Kaylee Lines alongside Joe Matthew. We are up north in New York today, not in Washington, D.C., but of course, we're still following every twist and turn when it comes to the 2024 election. And we've been following Vice President Harris and her vice presidential selection, Tim Walz, as they have bumped from swing state to swing state on this tour in the week after announcing the joint ticket with the selection of Walz. And they were in Las Vegas, where we heard something from Harris that we had heard in Las Vegas before, but from Donald Trump. Joe, she too would like to see no taxes on tipped income.
Even though she's got the endorsement of the SEIU already, think Culinary Workers Union, that's
service workers
backing Kamala Harris here. But why not? I guess Donald Trump was quick to remind her, by the way, that that was his idea. And right at the same time, on the same weekend, Kaylee, as Kamala Harris adopts a Trump proposal, J.D. Vance does the Sunday morning tour calling for an expanded child tax credit, and I can't figure out which party these guys are with anymore.
Yeah, calling for $5,000 child tax credit. Of course, that's something that Democrats on the Hill have been pushing, just as Republicans on the Hill have gotten behind this no tax on tipped income thing because Donald Trump was behind it. And it does raise the question. We're talking about two tickets here that are really fighting over the exact same group of voters and putting forward similar policies to win them over, which kind of begs the question, what's really going to be the difference between these two potential administrations?
Well, and of course, we're waiting to learn a lot of those answers from the Harris-Walz campaign, and let's get into it with our panel. They're back together today, Jeannie Shanzano and Rick Davis. Jeannie, of course, Bloomberg Politics contributor, political science professor, Iona University, and Rick, partner at Stone Court Capital, Republican and Bloomberg Politics contributor. So, Rick, are you scratching your head here? J.D. Vance wants a higher minimum wage. Now he wants an expanded child tax credit. Kamala Harris says no taxes on tips. Cats and dogs living together?
Well, it is interesting that a lot of the suggestions that the Trump campaign have made tread on traditionally Democratic toes, right? And so it doesn't surprise me that Kamala Harris and her team sat down one day and say, hey, we should have thought of that first, right? These are our people, hospitality workers and folks who get tips and get taxed for them. So I think all's fair in this war that is playing out. But I would say I can't wait till next week because so far I think Donald Trump and the Trump campaign have announced a new tax cut almost on a weekly basis since the Republican National Convention. And I'm for tax cuts. I'm a Reagan Republican. I can't imagine a better time to debate policy. And the fact that the Democrats are now thinking, hey, maybe this is the best water to swim in, I think is spectacular. We should actually be able to find a tax policy at the end of this campaign somewhere, for the next president.
Well, we haven't necessarily seen a full tax policy outlined by the Harris campaign, Jeannie, other than specifically her ideas when it comes to tipped income. I know she said more is coming later this week. Certainly she has another opportunity to outline a lot of the policies she would like to introduce when she speaks at the convention in Chicago next week. But as we look at her rising in the polls, at least doing much better than Biden, is it all just on nothing other than energy, because we don't actually really know what platform she's running on necessarily.
Yeah, we don't have a lot of details on either side, I would say. We have heard, snippets from both at this point. The difference being that Kamala Harris has only been in this campaign for 3 weeks now, and Donald Trump has been in it for a couple of years. And his agenda is unclear as well when it comes to the economy. So, I think we need details on both so that people who study these things can score them and indeed tell us where we are headed if we follow one or the other path. And I think we will get more details from Kamala Harris. But let's be real about this. She's got little incentive to put out more details while her trajectory is on the rise. I mean, she is doing very well, whether it's crowd size, whether it's certainly polls, either swing state or national. So there will come a time when she has to detail these things out, and we hear it's coming. But at this point, the incentives for her to do so are very, very low. So I don't think we're going to get huge details on these things until she starts to see a reason to do that. And, that's what the Trump campaign is trying to do now, get her on the record with tough interviews, and she hasn't sat for those yet.
Well, Jeannie, you mentioned crowd size, so let's get into it. Donald Trump spent a good chunk of the weekend concerned about the size of Kamala Harris's crowds versus his, and went so far to accuse her of using AI to enhance the photographs and video that we saw in Detroit a couple of days ago. Went to Truth Social, writing that, quote, "There was nobody at the plane and she AI'd it," unquote. I've never heard AI as a verb, but here we go, Rick. AI distorting the campaign, whether it's actually being used or not now. As soon as you say that, people don't trust what they're looking at. But when it comes to Donald Trump, what does it tell you when he's going back to crowd size matters?
Yeah, the most infamous one was the largest crowd in history came to his inaugural address in 2017. And of course, that then prompted the media to compare it to Barack Obama's and virtually anybody else's, and found it wanting. And I've never met a politician who is more needy for the idea that more people came to see me than ever before, especially in this era of the social media and the internet, where tens of millions of people any given hour could be seeing or hearing what you're talking about through social media. But like the idea that they have to trundle in through a turnstile and get magged and walk in and sit down in a room somehow is incredibly attractive to Donald Trump. That is about as old school as you can get in politics. And all I would say is, then why don't you get out and show us what your crowds are looking like these days? Because what's interesting is he's just decided not to campaign anymore. I think, 8 events since his convention, and only half of those were big rally events. My guess is there's a little bit of crowd envy going on down there in Mar-a-Lago.
Well, I guess we'll see how crowded it is, at least in the cloud or in whatever server X uses when he is on with Elon Musk at 8 p.m. Eastern time for what Elon described as a no limits, unscripted conversation, no limits, at least in terms of subject matter. But that is going to be another chime, Jeannie, to the point that you were just making earlier about the criticism Harris is facing for not doing sit-down interviews or answering questions off the cuff. He gave that press conference at Mar-a-Lago last week. He's doing this with Elon Musk tonight. Is Harris missing opportunities to be doing the same?
No, I think we're going to see her get out. At this point, I'm not sure I would describe sitting down with Elon Musk as the kind of tough interview that she needs to be having. She needs to be with real reporters and people, asking questions about policy. Elon Musk is fine, but certainly he is not a journalist who's going to ask the tough questions. I think the problem for Donald Trump, whether you talk about sitting down in Chicago with the Black Journalists Conference, or you talk about the presser and who knows what happens tonight, is he himself cannot be disciplined enough to take her on things that matter. The economy, inflation, cost of living, cost of housing, immigration, go on and on. So he has been tripping this up, and that's what's gotten people who support him, like Bill Ackman and some others, a bit frustrated. I mean, he went to the Hamptons, and when he was asked what issues he should talk about. He told big fundraisers, he is who he is, he's not going to change. So for anybody who's looking for a change in a disciplined Trump that we thought might happen after the attempted assassination, he himself said it's not going to happen. And that's the problem that the campaign is facing right now. And that's the boon for the Harris campaign, because she doesn't have to be answering tough questions. She can just let the focus be on him and his antics. And that is keeping her energy up and afloat in this race so far. If this race is about him, it is a loser for him. He's got to get it on her and on the issues.
Well, I have to admit, a lot of this is happening exactly the way Rick and Jeannie told us that it would. Just in our remaining moment here, Rick, I want to ask you about what happens on Thursday. Kamala Harris will be on stage with Joe Biden. She has yet to put out a full economic policy statement here, an idea of what her proposals will be. So people assume that it's going to be Biden 2.0. Does it help her to be at the podium with him?
You know, there's got to be a transition. This thing was done in such haste when Joe Biden decided to withdraw from the campaign. And next thing you know, we wake up and almost overnight, she's the nominee of the party. So there does seem to be some repair work that needs to be done. And I think it's smart for them to do it in not a targeted state and just begin that process overall. He'll make his appearance at the convention. They'll say nice things about him. But I would say more importantly, post-Labor Day, he needs to, spend his time managing international crises in the economy and Oval Office. And she hits the road, and it's really not a Biden, Kamala Harris campaign. It's really important she establish herself. I totally think it's appropriate for this kind of transition. But transitions end the day after the convention.
So you hear Kaylee, J.D. Vance on Sunday morning interviews was referring to the Harris administration, not the Biden-Harris administration.
Interesting to note the language changes. All right, Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, thank you so much, as always, for joining us as we're here in New York, but now we want to send it back to Washington, where Amy Morris has a check on world and national news. Hey, Amy.
Hi, Kaylee. For the first time, Ukraine's President Volodymyr Zelensky publicly confirmed that his forces have seized a swath of Russian territory, and that's prompted evacuations in Russia's Kursk border region. Reportedly, about 180,000 people who have left or are waiting for help so they can leave. That's about a sixth of the population. Russia says Ukrainian forces have penetrated at least 7.5 miles into Russia and control a border area about 25 miles wide. Columbia University is amping up its campus security ahead of the fall semester, and commuters say they definitely noticed it.
It definitely changed my commute route because the plan was to just cut straight through campus to go through the hospital. Now I can't do that.
Last week, we were able to walk through. All we had to do was tell them who our contractor was and where we were going. But now it's a different story.
Columbia's security level works on a color code. It was relaxed to green over the summer, but now it's back up to orange. Gaza ceasefire talks planned for later this week. Ahead of those talks, the U.S. is shoring up naval and air forces in the Middle East to help Israel fend off any major attack from Iran or Hezbollah. Global news 24 hours a day, whenever you want it, with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We are looking at a mixed market right now with the Dow lower, the S&P, NASDAQ. They're both higher. 5-point gain right now on the S&P, up by about 0.1%. Dow Industrials down 119 points for the Dow. Decline right now of 0.3%. NASDAQ is up 0.3%. The NASDAQ 100 index up 0.2%, while the Russell 2000 index of small cap shares down now by 0.8%. 10-year yield at 3.90% with a 2-year 4.01%. Gold up 1.5%. 24,467 right now on spot gold. West Texas Intermediate crude up 3.1%. Bitcoin 59,000 up by 2.1%. 59,725 on Bitcoin. Some of the other stories we're following. JetBlue Airways has kicked off a $2.75 billion bond and loan sale backed by its loyalty program as the carrier seeks to raise reserves and fund general corporate purposes. Shares of JetBlue, they are falling today, plunging by 20%. Recapping, stocks higher, S&P up 4, up by about 0.1%. Balance of power continues now, and here they are in New York, Joe Matthew and Kaylee Lines.
Live from New York. Kaylee, we made it to world headquarters here. Thanks for joining us on Bloomberg TV and radio. I'm Joe Matthew alongside Kaylee Lines with our eyes on the markets. It's interesting when you come to world headquarters, Kaylee, you actually get to spend time talking to all of these smart people. We get to pick their brains in person, specifically when it comes to the markets. And I'll let everyone know, coming up, an important conversation with Natasha Hall, the senior fellow with the Middle East program, the Center for Strategic and International Studies, with the latest that we're hearing from Israel and from Iran. We're talking about the potential for a ceasefire this week, as well as the potential for an Iranian retaliation against Israel. More on the markets, though, with Abigail Doolittle with us in person today, Bloomberg Markets correspondent, as we consider, Kaylee, whether the yen carry trade blow up is actually over.
Yeah.
That question has not been answered yet.
Abigail, do we know the answer to the question? Do we even know how big the carry trade was in the first place?
I don't think that we do. Some were saying it was around $4 trillion. I know JP Morgan early last week was saying that it was halfway done, and then a day later they were saying it's 75% done, which made no sense since the yen had not moved. One thing I can say from the standpoint of simply taking a look at the chart of the dollar yen, it looks very likely to move back down toward 130, which would suggest it's only halfway through. I could even make a strong case for the yen to strengthen more. What makes this so interesting is if we take a look at bonds, we have the 2-year yield and the 10-year yield breaking down lower. Now, yes, of course, this has to do with the Fed. The last time I looked at WIRP, or the World Interest Rate Probability, in the Bloomberg terminal, it suggested for September 1, maybe even 1.5 hikes, and then in November and December. But let's remember, as you know, bonds are a haven asset class. So if we have another period of risk off and you have the yen rallying and bonds rallying, yes, that could reflect the Fed, but that could also reflect a flight to safety in a big way as people really brace for the next wave of that yen carry trade. So I would say it's not over yet. Right now, all these markets are in pause, and I think that we're going to see the Nikkei sell off pretty dramatically again soon. What the trigger will be for that exactly, I'm not sure, but maybe some commentary out of one of the central banks.
I went to WIRP Go. I love this. I'm getting a tutorial on the terminal while we're at it. Just coming off earnings season, there's been more at play here, and we've got big data this week. Is anything really big going to happen until Wednesday?
Well, so taking a look at PPI and CPI due out this week, bringing back into the Fed, I would say that if there's more risk if the number is hot. If the number is better than expected, I think that it could stoke stocks staying kind of where they are, which is the S&P 500 really today not doing much of anything at all. But we're kind of in this pause after that big risk-off period. I think, though, if those numbers come in even slightly hot, PPI or CPI, I think that you could see a real rethinking of yields and the risk assets. It seems less likely, though, at this point. And again, like one of my starting points is simply the charts, which we're obviously not showing right now, but the uptrend, that dramatic uptrend in yields coming out of the pandemic bottom as the Fed, did that amazing historic hiking cycle, it has started to break, which suggests that we could likely see bonds continue to come to rally as yields come in, which would be supportive of this data, basically steady as she goes downward. For PPI, expected to come in at 2.7% for the month of July, 3.2% for CPI ex energy and food. So still not at that 2%, but
not
moving,
quite there.
yeah, not quite there. Moving in the right direction, though.
Well, and it's interesting to consider as we think about how the market is parsing through its own thoughts around the Fed and around the election. It is worth noting, and Joe and I have been talking about it this hour, it does feel like in two parts of the world, geopolitical risks potentially intensifying as we're waiting for Iran to strike back against Israel, and Ukraine has sent troops into Russia, and Russians are now fleeing the Kursk region. Are you seeing any areas of the market in which you do see that geopolitical risk sensitivity picking up?
You know, that's a really great point, Kaylee, because these geopolitical tensions over the last, week to 2 weeks, really frankly all year, but over the last week to 2 weeks have really heightened, and it's not pricing in so much, although you could make the case that some of last week, that yen carry trade unwinding might have had something to do with that there was some fear that there was going to be some big act of reprisal for that assassination of that Hamas leader in Tehran nonetheless. It's unclear to parse it apart, because then on the other hand, there are folks saying that within the Japanese banks on the day of the Nikkei slide, when it was down 12%, were down 20%. Some are saying that there's bad collateral. But to your point, I think that could be a reason to think that maybe we will see bonds rally and the yen rally. When I take a look at the technicals on the charts, I can see generally pretty clearly what direction we might go, but you don't always know what the what is, but that makes a lot of sense, that people would want to be in safe havens.
Abigail, great to have you. Abigail Doolittle, our star on the markets here on Balance of Power these last couple of weeks, Bloomberg Markets correspondent. Great to see you here in New York. Kaylee, we should talk more about what's happening in Israel right now. Of course, we have the potential at this moment for a ceasefire with Hamas this week. We also have the potential for a new war between Israel and Iran, or at least a retaliatory strike. Joe Biden was talking about it in that CBS interview we discussed, in which he referred to himself as a distraction. That's why he left the presidential race. He also talked about the chances of a ceasefire emerging in Israel. Here's what he said.
The plan I put together, endorsed by the G7, endorsed by the UN Security Council, et cetera, is still viable. And I'm working literally every single day and my whole team to see to it that it doesn't escalate into a regional war, but it easily can.
So it easily could escalate, and that's the other complicating factor in this, Joe, that yes, they want to achieve a ceasefire between Israel and Hamas, which is a proxy of Iran, and yet the threat of Iran is still very much hanging over Israel. As an Israeli military spokesperson just delivered a televised statement moments ago saying that they are at the highest state of alert. So for more on this, we bring in now Natasha Hall. She is Senior Fellow with the Middle East Program at the Center for Strategic and International Studies. So Natasha, we're really on watch for two things this week that theoretically, at least to me, would seem that they would counteract each other, or they contradict each other to a certain extent. Reaching a ceasefire agreement, which would be cooperation between Israel and Hamas, at the same time that Hamas, which is a proxy for Iran, is potentially going to take part, or at least could, in an Iranian retaliation against Israel. What are you actually expecting will go down in the coming days?
Well, thanks for having me. I think that's a perfect way to put it. It's essentially a checkmate at the moment between Iran and Israel. As you had mentioned earlier, Israel had assassinated Ismail Haniyeh, who is the top sort of Hamas negotiator, within Tehran in a very highly secure IRGC building. This was a huge humiliation for Iran, and they felt like they probably would have to respond in some way. At the same time, you see a new Iranian government taking shape, which could be delaying sort of a response towards Israel. And you also have these ceasefire negotiations, which are supposed to be jump-started this Thursday. And many of the negotiators have said this is the final step. This is it. There won't be any more real efforts. You don't know what that means, but Iran is in a very difficult situation. They know that any kind of retaliation would likely attract a much larger Israeli retaliation. And at the same time, they also know that it could blow up the ceasefire negotiations.
What does it tell you, Natasha, when you see the news that we're seeing at the Pentagon here, the Secretary of Defense surging the guided missile submarine USS Georgia and the aircraft carrier strike group Abraham Lincoln into the area. What is the Pentagon bracing for?
Yeah, I mean, we see aircraft and warships and even a submarine heading into the region. I think a lot of this could be also posturing, making it known that the United States will be there if there is any regional escalation, and hoping to sort of check it before it begins with that predominant posture in the region. That said, it will be there if it needs to be used. But I think that what they're hoping to do is to signal something to Iran and to Israel, I think, that regional escalation should not be in the cards at this point, at this very, very tenuous point of ceasefire negotiations.
Well, and considering at the parties in those negotiations are not just Israel and Hamas, it is also the U.S. and Egypt and Qatar, and these are the allies who have been pushing for these talks to take place this coming Thursday. What role are they playing here, and how do you expect the diplomatic back channels between these countries and others in Tehran or elsewhere are working right now?
Yeah, I mean, this has been the really fascinating part. You actually saw the Jordanian foreign minister go to Tehran for the first time. A high-level diplomat from Jordan has gone to Iran in about 20 years to really try to take the pulse, I think, of the Iranian regime. You saw this unprecedented joint statement from Qatar and Egypt and the United States on Friday, really imploring the warring parties to take these ceasefire negotiations seriously and get it done. So you have a lot of other players here. And that could be who Iran goes to for their response, these other players like the Houthis, to try to demonstrate some kind of plausible deniability for a military retaliation on Israel. And that could be what U.S. forces, the U.S. Defense Department is bracing for at the moment, because it remains to be seen where that response will come from. And so it makes sense to have this sort of overwhelming presence in the region at the moment.
Natasha, there was a strike, an Israeli strike on Saturday in Gaza against a school, killed nearly 100 Palestinians, and the IDF says there were Hamas fighters operating in that school. But this is just yet another example of why so many people have been upset about what's happening here, calling for restraint, calling for the protection of Palestinian civilians. This is one of the deadliest bombings that we've seen in this 10-month conflict. Is it just part of the day-to-day headline now, or could this in fact jeopardize a ceasefire from being reached this week?
I mean, unfortunately, it wasn't a new incident. We'd seen schools that are being used as essentially displacement camps being bombed about 5 times in just the past few weeks. This one was particularly devastating, probably killed around 100 people. There were about 6,000 people that were sheltering in this school mosque compound that had been told to evacuate from other areas by Israeli forces. So I think it just shows the sort of the lack of clarity on how serious warring parties, including Israel, are about ceasefire negotiations and really the way forward. Because at the end of the day, if Israel still sees the elimination of Hamas as the end goal, it remains to be seen how you can get these ceasefire negotiations done with that very same group. And that's why all of these various attacks are so devastating for Palestinians and for their future as well.
All right, Natasha, it's always great to have you here on Balance of Power. We really appreciate your time as we are all on watch for what happens Thursday or potentially even sooner. Natasha Hall of the Center for Strategic and International Studies, where she is a senior fellow with the Middle East program. Thank you so much. Of course, that's just one of the things that we are on watch for this week, Joe, and we have plenty to watch out for as we look forward to this evening. Of course, you and I will be back on Bloomberg TV and radio at 5 p.m. Eastern time for the late edition of Balance of Power. And then a little bit after that, 8 p.m. Eastern, is the big event, Trump and Musk, X Spaces.
Yeah. Look, it's already having an impact. Donald Trump has not only made his triumphant return to what we used to call Twitter today, he's posted now 3 times, Kaylee. We got a couple videos up there, and I wonder if this is going to be the big transition. DJT stock down 5%.
Yeah, so why have True Social if you're...
I don't know. Maybe
You
it's just a
also-
one-day thing,
Does
warming
Truth
up to the
Social
interviewer.
have like a Spaces?
Good question. You said they're scaling up for this, right?
Yeah,
They're
Elon
adding
Musk said he's
servers.
running tests. He's trying to make sure this thing doesn't crash a la Ron DeSantis last year.
No feedback, no coughing. We'll see how this goes. We'll be listening together. It's audio only, right? Think
Yes.
of how much we're going to miss. Nice to see you in New York. As
Yeah.
Kaylee mentioned, we'll meet you back here 5 o'clock on Balance of Power on Bloomberg TV and radio.
is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Monday, August 12th. He's back.
I'm back. I heard a lot happened in the markets last week.
You missed a lot of stuff.
I did.
Although,
I mean, Monday and Tuesday were pretty big, weren't they?
And my yes.
Yeah.
But my understanding is you are spending a lot of time on your phone and reading in on stuff.
Oh, yeah, the whole time. Yeah, I know everything.
You know
that
everything?
happened. Yeah.
Ready to talk the carry trade?
Ready to talk the carry trade.
We're going to get to that in just a moment. It is that yen?
Yeah, that's what I'm ready to talk about.
Okay, well, we're going to get there. All right, everybody. It is Bloomberg Business Week, and it definitely feels like we are in a bit of a wait-and-see mode on this Monday, and definitely different from where we were last Monday. And so what we're coming to over the next 60 minutes, I'll get there. Yep, it's Monday. It's a big economic week, and it's kind of, Tim, at a time when a data point comes out and it can shift the narrative, confirm the narrative, create some volatility. That's where we are. So we're going to kind of get to what you need to know.
Yeah, look what happened with that July payrolls report just about 10 days ago, talking about a shifting narrative with one data point. We'll talk about that. Also, we'll talk why Apple's cash flow prospects stand out over other big tech, including those competitors, Microsoft and Amazon.
Some interesting research out from our Bloomberg Intelligence team. And then, folks, we're going to get to the CEO of the nonprofit Girls Who Invest on attracting and advancing women investors. You know, women, there's a bulk in investing in the markets, a bulk that own a lot of different investments, but we still have a lot of ground to make up when it comes to those actually women being in the investment management business.
Also, speaking of investments, one more thing. Life is too short, and how home buyers are justifying buying risky oceanfront properties. There are deals to be had, people. It's just the ocean might be creeping up on that home.
Yeah, living on the edge, the ocean's edge. All right, let's get to it first, though, with a check on the trading day. Your top business stories. Here is Charlie Pellet.
Hi, thank you very much. Great to have you, the two of you, back together again with the Dow, the S&P, both in the red right now. We have got NASDAQ advancing up by 30 points now, up 0.2%. Bottom line here, we have got stocks struggling to gain much traction ahead of inflation data. PPI tomorrow, CPI Wednesday, that will help shape the outlook for the Fed's next steps. Equities seeing small moves in another session of tepid trading volume. The S&P down 5 at 53.38, down 0.1%. The Dow down 210, down 0.5%, while NASDAQ is up 25, a gain of 0.1%. 10-year at 3.90%, the 2-year 4.00%. Gold up $35 the ounce to $24.66, up 1.5%. West Texas Intermediate crude oil up 3.5%, $79.54 a barrel, and Bitcoin now higher by 1.4%, 59,316. Sources tell Bloomberg Starbucks is discussing a settlement with Elliott Investment Management that would give the activist investor representation on the board of the coffee shop chain. We've got Starbucks up now by 1.8%. So again, recapping here, we are looking at a down Monday right now. The key takeaway, little changed, with the S&P lower by 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie Pellet, thank you so much. Carol Masser, along with Tim Stanovic, live here on Bloomberg Business Week. Now, we know this is a market environment that moves from economic data point to economic data point, and we also know that not all economic data point or data is treated equally by investors, nor economists, nor the Fed for that matter, Tim.
Well, this week, though, we do have a few that are watched by all as we get 2 reads on inflation just over the next 2 days. Also a read on retail sales on Friday. Throw in some jobless claims, Carol. The Fed is watching the U.S. labor market closely. All this could make for an interesting week. And then Michael McKee next week goes off to Jackson Hole.
Right.
So we hear from Fed Chair Jay Powell.
We'll see what he has to say, how that shapes the narrative. All right, so let's get to it. With us, our roundtable, Bloomberg News economics editor Molly Smith, along with Bloomberg Economics U.S. economist Stuart Paul. Stuart here in studio, Molly on Zoom here in New York City. And so let's get to it. So we do, first of all, Molly, lay it out for us and what matters. And it's actually, forgive me, I think there's 3 inflation reports, although I'm not quite sure. The New York Fed one-year inflation expectations, it already came out. There's 2 more, though, coming our way over the next couple of days. What matters?
Yeah, I mean, it's really just going to be CPI, the Consumer Price Index, in full focus that comes out on Wednesday this week. And we also get a look at producer prices. So this is a level of wholesale inflation that comes out on Tuesday. Obviously, the CPI is one of, if not the biggest market-moving events in any given month. And I don't think that this will necessarily be too much different from that, but hopefully we won't see nearly the same reaction that we did to the jobs report that you guys mentioned just 2 weeks ago. Pretty fast and furious moves in stocks and treasuries on that front. And I think this one is, I think people are maybe just looking for, okay, let's just get through this. Hopefully it's a fairly as expected reading. Maybe inflation's going to pick up a little bit relative to June, but the broader trend of disinflation is still going to be intact. And I think something like that will just bring, hopefully, a reassuring calm to the market. But That said, it doesn't take that much to tip the scales these days. Like, everybody is just very jittery about the data right now.
Well, Stuart, come on in here. Let's talk CPI before we talk PPI here, because you and the team over at Bloomberg Economics argue that July CPI will likely be soft, with the year-over-year change in core CPI edging further down. Take us into your thinking and what you're modeling.
So we have a few factors that are going on. First is that the most interest-sensitive categories, things like used autos, are exerting meaningful drag on both core and headline inflation. We have some pretty tame numbers for gasoline, so it's not really boosting the headline all that much. And then if we look at some of the more discretionary services categories, things like airfares, things like hotels, we're expecting to see some pretty meaningful drag on the core. The thing that's going to matter...
We've heard that from the earnings front, the earnings picture, whether it was airlines, whether it was Airbnb. I mean, Expedia, nonetheless, their stock rallied because there was a beat, but everybody's talking about softness in the travel sector.
That's right. It's really some of those more discretionary services categories where consumers are tightening their belt. We expect to see the same thing in the retail sales number this week. We expect to see folks really looking for discounts and doing some online bargain hunting, as opposed to splurging on food services and some more of the interest-sensitive items like appliances and autos, even though we will get some auto spending after last month, the June cyber attack on auto dealers. But on the inflation front, it's interesting. This is one of those peculiar months where we get PPI ahead of CPI. And we're expecting to see more softness in the headline PPI number than in CPI. So to Molly's point about folks wanting to take a deep breath, it's possible that when they see the monthly pace of producer prices ticking down, so when we see producer price inflation, which is 0.2% on the month instead of 0.4 as they saw last month, folks might breathe that sigh of relief. It might be a little bit too early when they then see the headline pace of CPI increase on the month. So this is one of those peculiar months where the timing of the data has the opportunity to both lull people into a sense of complacency and then give a little bit of a whipsaw just the next day.
Well, Molly, what matters in terms of, like, help me through the supply chain, right? PPI are the input prices, right? So is that something then will show up in next month's CPI report? Like, how do you kind of distinguish those two pieces of data?
So generally, when the reason why you would, as a typical person, care about the PPI is because what's happening at the producer price level tends to filter through to consumers over time. Over time doesn't necessarily mean 1 month, though. These are trends that can take more time than that to develop. And of course, movements through the supply chain are not always that quick. But it's, of course, like, really important to look at for the overall inflation trend, especially, when you're looking at what's happening with commodity prices. And so many of those have been really wild over the summer, with looking at what prices are for coffee and chocolate and other kinds of metals and like things like that, that just, maybe you as a consumer aren't purchasing that as a raw good, but when you purchase it as a final product, then you start to notice how expensive those goods can be.
Stuart, come on in, because I don't know about you guys, but I was gone last week, and even though I wasn't, glued to my phone, I could still hear people screaming about a 50 basis point rate cut.
Oh, wait, no, you mean the emergency rate cuts?
Yeah, the emergency.
The 75 basis points,
there was 70.
That's right.
I forgot, who was it that
Siegel?
Jeremy Siegel was calling for?
So a lot has changed in just a few days. I don't hear those echoes right now. And certainly we did not
pretty quickly, actually.
We didn't see one of those emergency rate cuts come from the Fed, but could we get not necessarily a reaction, but could we get calls for some sort of movement from the Fed based on the data moving one way or the other this week, Stuart?
I think that this week is going to be one of those odd weeks where you feel a little bit more stagflation risk as opposed to just outright recession risk. So, and I think that because equity markets have recovered, because the feed through into credit markets, when it comes to interest rate spreads, when it comes to default risk, we haven't seen any sort of material move there. So I think that when it comes to what we're going to see this week and how it shapes the narrative, it's going to be more so around the idea of stagflation. We're going to see inflation data that aren't as good as they've been in the last 3 months. We're going to see retail sales data that, when you look deeper in the core, it's going to be pretty dismal. I think that looking at the control group for retail sales, it's going to be pretty rough, and we're going to see a 0.2% decline in the month. And manufacturing data to round out the week, I also expect that we're going to see a decline, about 0.3% month-on-month decline in manufacturing output. So we're not going to have as good inflation data, and some of the other fundamental concepts are going to show some weakness, and that could be enough to just keep folks on edge having this 50 basis point, 25 basis point debate for another month.
Which makes me want to jump to, and I want to ask both of you, and Molly, let me start with you. So are more people starting to talk about a recession? And that if we get a recession, that, if the Fed possibly is behind the curve in terms of maybe sparking some growth or catching that we're slowing down maybe faster than we anticipated, could it be a deeper recession?
More people definitely are talking about recession since that jobs report came out 2 weeks ago. We've seen JP Morgan and Goldman economists both boost their likelihood of a recession in the next 12 months. So I'm pretty sure both of them are still below 50%. So still fairly low odds. And I think those are the only two that I'm really aware of who have come out and boosted those odds in recent weeks. But
right.
I'm not really hearing that it would be that it would make a recession any deeper. I think it's just now looking at, is the Fed behind the curve? Like you said, that people are wondering that. And of course, if you get more inflation data that comes in softer than expected, that's only just going to, add fuel to that argument.
Stuart, remind us where you guys are, the team, on when it comes to recession.
So we've been noting that there's been a material slowdown in some of the underlying factors driving growth for a long time. We've also been noting that, again, even if you just look at the Q2 GDP data, about a quarter of the growth that we saw was from inventory accumulation, that folks in firms aren't trying to accumulate inventories. It's just that they're accidentally producing more on the expectation of resilient consumer demand that just isn't there. And so we think that the Fed is behind the curve. And we do think that some of the recession probabilities that have been assigned are probably a smidge too low. But we've always been a little bit more bearish, expecting a 4.5% unemployment rate by year end. And if we continue along this trajectory that we saw in the last month, we'll hit it or exceed it.
It's interesting because you guys have been for a long time, and at a time when it almost felt like, really, can you still be calling this? And now it starts to feel like things are falling into place. Guys, perfect setup for us on this Monday. Bloomberg News economics editor Molly Smith, along with Bloomberg Economics U.S. economist right here in studio. Now we got to take all of this together, Tim, and talk about the Treasury and rates market trade.
Yeah, among our most read stories on the Bloomberg on this Monday in August, how bonds are back as a hedge after failing investors for years. Finally, contributing to this story, Bloomberg News rates reporter Michael McKenzie. He ended last week with us, and now he kicks off, Carol, the week for us.
Welcome back. You can't get away from us.
He tries. He works from home to try to get away from us, and we still make him turn on the camera and come hang out with us.
So Tim was away, and he did read in.
Oh, yeah.
But so what?
All caught up.
He missed nothing, right?
Yeah, we're violently unchanged.
Violently unchanged. That's a good way to describe the week.
How are you thinking about things on this Monday here?
We're pretty much, it's interesting too, because we've got the 2-year yield right there on 4%, 10 years at 390. So if you think last week we got below 380 on 10s, and we bounced back to 4%, just shy of 4% on Thursday after that very weak 10-year auction. So we're back in the middle of the range, and I think the market's just parked here waiting for what will be, I think, the most important week for data until we get the payrolls report the first week of September. We've got PPI tomorrow, CPI, and then retail sales and jobless claims. So we're going to see whether or not inflation is trending down, or whether it's actually going to be proved to be stickier than people are expecting in the bond market. That will put pressure on that front end. You should see higher yields if inflation is stickier than people anticipate. That said, if inflation comes in online, bang in line with expectations, then I think that the focus will turn to, okay, how is the consumer looking for retail sales? And are we seeing any signs of weakness in those initial weekly jobless claims on Thursday?
Of the data points that you just mentioned, of all the economic data that we're getting this week, Michael, which one do you think has the biggest implications for the rates curve?
I'd say CPI. If CPI is trending in the right direction, that means the bond market can go, right, this is yesterday's story, and let's just focus on the consumer.